Good morning, traders. Anthony Crudele here, and welcome to NinjaTrader Live. Joining me in studio on this Tuesday morning, or 2 days before the Fed meeting, the one and only senior economist, Tracy Shuchart. Good morning, Shai.
Good morning, everybody.
And joining us on the big screen, who's very jealous of my shirt this morning, our senior market strategist, Jimmy Cagnina. Good morning, Jimmy.
Good morning, Deli. Good morning, Shai. And you're right. I feel as good as you look today, baby.
Yes. I threw the shirt on just for Jimmy today, and I'm so glad it's blue because it is blue. I do wear a lot of blue. I'm not wearing a lot of violet, as though the camera might be picking up. We'll discuss that maybe at a different time here. But anyway, Tuesday morning coming into FOMC. It's always a coin toss. I put that at my morning note. You never know what you're going to get the day before the FOMC. It could be a really busy day. It could be a nothing day. Tariffs continue to be kind of, creeping into the headlines, more and more talk. I was listening to some other news networks this morning talking about tariffs. I still come out of yesterday, Shai, and talk about the dollar, how the euro's weakening against it. Euro's down 0.5% this morning. If you look at the dollar move coming out of that euro announcement, that tariff deal, dollar strengthening. We've talked about how that trade has been people have been shorting dollar. There's a lot of short positions in the dollar, right?
Overly short.
Overly short. I should have put that in my note. I put more what the euro COT data was. But now you're seeing that little bit of unwind. But what's interesting about that, and this is what I'm going to pick both of your brains about this morning, equity indexes still remain bid, right? I mean, so you would think with a rising dollar, you might get a little pressure on stocks. God forbid. I mean, maybe 0.5%. No, doesn't even happen. Up this morning again. S&P's up 15. Nasdaq's up 110. Russell's up 9. Dow futures are up 69. Shout out to Pharm. And then you've got gold still bid 33.70. I mean, it's just doing nothing. It's just a consolidation near the high, but you're not seeing those other markets move off of the dollar.
Yeah, absolutely. I mean, and I think a lot of this is positioning, and a lot of this has to do more so with the euro than necessarily the dollar. And the euro is the most heavily weighted in the dollar index basket. And so I think it's more of a move because of what the euro is doing. And obviously the deal is much better for the U.S. than the EU. And so we will see what happens and see if this is just kind of, if we get a squeeze because positioning is overly short, what does that exactly mean? Does that really, if it's just a short squeeze, is that really going to affect the other commodity markets? Maybe,
no, that's a great point. That's a great point, Shai. I'm glad. That's why I wanted to talk about this with you guys. I see everybody, number one tip, always talk with people smarter than you. It's been something I've done most of my life. Jimmy, what are your thoughts on that? I'm curious, what do you think about the dollar-euro move, or just the dollar versus the other markets coming into this morning?
Yeah, I mean, I'm going to talk about that in the Edge Report in a minute. But the euro is having a big 2-day sell-off, relatively speaking. We had that long run-up for a long period of time. And now we're about that 38% retracement back down. So I have my eyes open. I'm looking at that. All the currency pairs are, right now are on the move as well. It's not just the euro. I mean, sterling is moving, Canadian dollar's moving a little bit as well. But the euro is leading the pack for sure. And I think, to Tracy's point, that one's probably moving a little bit more, and it's more to do with EU than it is with the currency pair itself. But the dollar's gonna move. It's gonna retrace. So that's, I think, what we're seeing right now overnight in the last couple of days going into FOMC.
Yeah, I mean, definitely the euro. I'm surprised that we don't see more traders trading the euro. It's actually a pretty decent market. Fun fact, I actually traded the euro the first day it was ever open at CME Group. It's kind of interesting.
Nice.
Yeah.
I used to trade 6C.
Yeah, 6E. Yeah, that's what it was. I've traded 6E in the pit, and I traded it the first day it was electronically. I remember I was up like a couple grand or whatever it was. I was trading in Spike 2. There was Spike, then there was Spike 2. It was electronic trading floor up at CME on 13. And I remember I was up, and the next thing I was just getting clipped because the liquidity got really thin. I was like, oh, this is going to be great. I'm going to come in here and kill it. Next thing you know, I just got clobbered in it. And then I ended up going down, and I traded in the Euro pit for little bits and pieces every now and then before the S&P opened. I was a junkie, man. Get it in there. So let's talk about any news overnight, Shai. What's going on?
It's light news. We have U.S. and China resuming talks in Stockholm. Again, don't expect any large breakthroughs in this. I think really what both sides are trying to agree on is another 90-day extension. So we'll see what happens with that. Then you have the EU and U.S. rush to clinch the final details to lock in the trade deal. I know they said we have a trade deal at 15%, but the details, no details are really out yet, and so they want to, by August 1st, get a non-legally binding joint statement by August 1st. So we will see what happens with that. Right now, there's two holdouts, and that is Germany and France. So they have to get all of the EU members to agree on this. The good news is, the best news of all, we heard that French wine and spirits will not be included in the tariffs. Phew.
Yeah.
So those will remain duty free.
Yeah, we know Shai likes her Sancerre, so we want to make sure that doesn't change the pricing. Yeah, so I know. See, good morning, chat. It is an interesting wear for me today. I wanted to show, my range. I'm not just solid colors, even though I really kind of am mostly solid colors. But I actually like this shirt. I don't know what it is. It's a good golf shirt. I'm not playing golf today either. Just kind of woke up and was feeling it. Good morning. Oh, we got Leo in here this morning. Of course, we've got. I have to always go back to the chat over here to see how far back from the morning. Engineer Bear, always first. Just want to make sure he's in here. Or she. We're not really sure. I think it's a he. Leo, Paulie, Cooper, Andrew, Tim Marco, Than Long. I can't wait to. You know what's going to happen one day, Shai? I'm going to get caught on one of these names. It's going to be one of those where it's like, you know what I mean? Remember, you know what names I'm talking about. Where you're like, Lee B Trading, Infinity Works, Michael, Sebastian, Angela. All good morning, everybody. Hit 140,000 overnight or yesterday subscribers. Make sure you like and subscribe to the show. I said we're going to do a big, kind of a giveaway or something. I don't know what it is. I announced it at 150. I said we're going to do something at 150,000. Everyone's like, well, what are you going to do? I'm like, I don't know. Well, let's do something cool. I mean, so it's going to be cool when we get to 150,000. So make sure you like and subscribe to the show. And thank you again for joining us this morning. Other things out there, and this is a great question. Also, good morning, Emilio and 90 Bid as well. Where was the question? It was talking about crude oil. Yeah, let's talk about that because crude oil strengthening or dollar strengthening, crude oil also not coming off of that. And I think it is important for you. I go back to what you guys both said, and I think you guys are right on with this. This is more of a euro situation than it is just a dollar, but there's still a lot of shorts in the dollar. The dollar has gone bid a little bit. Are we going to see anything spill over into the crude oil market?
I think right now crude oil is, that correlation goes in and out. It's definitely not one-to-one. Crude oil is actually more correlated to rates than anything else. That said, right now we do have a little bit of fundamental backdrop on crude going on in the fact that we have EU pledging to buy $750 billion worth of U.S. energy. In addition, Trump yesterday said that he is moving up the deadline for Russia to 10 to 12 days from the 50 days and considering putting secondary sanctions on members, on other countries. And so we'll see if that happens, but, that did put a bid under crude yesterday.
Yeah. So I guess what's the theme right now, right? A lot of independent movement off of what's happening, coming off of tariffs. We've obviously had some news that we would figure would spark the markets. It's not spilling off into indexes. It's not spilling off into gold. Those markets remain in trend, intact. I mean, yesterday had a little bit of movement in equities. The afternoon was a total snooze fest. Thank God we got our boys on there. I love listening to them. I could listen to those guys all day long. But again, it's if you're an independent futures trader and you're looking for volatility, it's kind of not there besides euro right now, unless you're seeing something else. Where else you see? What are you seeing in the tape, Jimmy?
In general, well, I mean, our good friend Ethereum, ETH is on the move again. Just kind of looking at those
Yeah.
cryptocurrencies, and I've been kind of experimenting with them. They're great markets to trade. We have 102,000 contracts traded already in the August micro Ether futures. It's a terrific market right now, up 0.88%. And it's a mover. It's a mover. It really is. So you got to, use limit orders and common sense, because, the bid-ask spread sometimes could be wide, but it's getting bigger and more popular. It is not going away. So it's a great market to think about.
Yeah, I've been trading the spot. I've been buying some ETH. Like I said, it's a very, I'm glad it's a boring trade. And it's got me going. I'm just buying the spot on Kraken. I'm not doing the futures as much right now, just because the one thing about crypto, for me, if I was day trading it, I would only use futures, but I'm trying to accumulate it for a little bit of a wider span. So I'm using the spot. Eventually I'll use the spot, or I'll use the futures to hedge against my actual ETH position. So like if ETH were to have a quick spike up, then I would use the futures to offset some of the ETH that I have, which is, that's a nice thing to have. But yeah, ETH is one of those markets where it's like, I'm going to talk to Jim Bianco about this today. This is a good time to plug our guest. He's, been talking about Bitcoin and stuff for years. ETH is becoming, it's already been somewhat mainstream, but I think it's getting more and more popular. I'm seeing it more and more talk about it.
Yeah, well, we had a lot of institutional flows because we have a bunch of ETFs now, right? Which we didn't have before. First we had Bitcoin, and then this year we had a lot of Ether ETFs come into reality, and so we're seeing a lot of institutional flows there as well.
Yeah, let's preview our guest as well. Jim Bianco is coming back on the network today. One of my favorite guests. Love Jim.
Yep, he's great. He's president of Bianco Research. He covers everything. I'm really excited to talk to him a little about the QRA, which we were talking about yesterday. His thoughts on what's going to happen on FOMC, a little crypto. We'll talk markets, obviously. So it should be a great conversation and a follow-up for when we had him on a couple months ago before we had any trade deals whatsoever. And so I'd like to see what his thoughts are now that we actually have sort of, I guess, some trade deals.
Yeah. He quoted a tweet of Andy Constant, Dam Spring. He's been on the show as well. Andy's a friend. I have to go right to Jim today and ask him about that QRA, because that's something I don't really understand too much about. And he was talking about if Andy's right, and he think he might be. And so we're going to start there. Well, actually, probably I'll put that tweet in chat so people can kind of get an idea of what we're going to be discussing. It's interesting. It could be a really busy day tomorrow. And so we'll talk with Jim about that. Good morning, Larry. Good morning, Brad. Good morning, Zentro. Again, good morning, Chad. Hit 140,000 followers. Like I said, announcements coming at 150,000. Going to be fun. Jimmy, before we get to your Edge report, bond market, we didn't talk about it. It's kind of gone real, stale, stagnant, not a lot going on there. Again, I think this feeds into the equity indexes, bonds kind of being quiet, equities doing their thing. What are you seeing in the bond market right now?
Yeah, we're seeing some sideways action. We're creeping up a little bit today. So, I raised my eyes. So let me change the chart there. I raised my eyebrows a little bit, but not much. Sideways 113 handle, still just, hovering around that 5% yield right now. There's a little bit of an ascending triangle in the works right now. We'll see. Forget about that. We'll see if we have a breakout one way or the other. But really, I have a couple lines in the sand here, and one is at that 114 handle. We're not there yet. We just keep teasing ourselves, and then we bounce back down. So all the moving averages straight across, anchored VWAP straight across. So this is really, really, really sideways with no direction home right now. And by the way, Anthony, one last thing. I just thought of a giveaway. You could give away that shirt at 150,000. You could sign it, give it away.
We'll hit, I mean, let's pump the brakes here. We get to 150,000 tomorrow. I start giving away shirts on this network.
All right.
Who knows where we can go?
Just quickly want to go over, we do have data
We
today.
have data today. Okay.
So 8:30, we have retail inventories and wholesale inventories. 8:55, Red Book. 9 a.m., housing price index, S&P HPI composite, consumer sentiment or consumer confidence. That's going to be a big one. JOLTS, job openings, obviously always looking at the labor market. And then at 10:30, we have Dallas Fed services revenue, Texas service sector outlook. So I think the most important thing will be consumer confidence, JOLTS, and retail and wholesale inventories for today.
Yeah, pretty jam-packed day of data. And we're going to be on with Jim Bianco for the 8:30 data, so stay tuned for that. And quickly, before we get into this morning's Edge report, Zentro is asking, is lack of volatility in the futures market a common summer trend? Typically is. I mean, you never know, right? But if you had to go back over, however many decades I've been doing this, most of the time summer's pretty slow.
And it's the summer of George.
And it's the summer of
We
George,
have vol
as Jim
compression.
Kirsten would say.
So.
Yeah, exactly, right. If you didn't catch that. All right, it's about that time. Take it away, Jimmy, for this morning's Edge report.
All right, well, let's finish with the 30-year Treasury bond. We already talked about the daily charge. Stochastic's going sideways as well. I forgot to mention that. Let's just drill in and see if we got any targets for today. Kind of not a really good volume profile so far. We have a point of control at the top here, approximately 113 in 1930 seconds. We're just bouncing off that R1 level, creating the top here, area of resistance at 113.23. But a nice kind of rally up. We're above that session VWAP here. We crossed that line, 5:30 to 6 o'clock candle. And there are some really nice mentor Q targets at the top. We have that one-day max up here at 113 and 31.30 seconds. And then JAX 4 is at 114 even. That's pretty close to previous session's highs here. So there's some targets on the upside here for the 30-year bonds. On the downside, well, we got the pivot kind of right in the middle, right above the London initial balance, and that's at 113.13. And then the bottom of the London initial balance, as well as previous session's lows, are kind of framing the bottom of the conversation here at 113.03. So right now, bulls are in charge of this market, and we'll see if we could break on through past that R1 level. Let's go back to what I think is the market of the day, or at least the week. The Euro FX versus the US dollar. We talked about it a little bit. Here's a daily candle chart. And you could see yesterday was a pretty big benchmark candle here. This is a benchmark candle. It's the biggest candle on the screen right now, and it was red. Continuation selling as well today. Now the moving averages, the 8's crossing under the 21. That's pretty bearish. We're below the 38.1% outside fib that I drew a long time ago, and we're also below the 50 EMA right here. So what's on my mind right now is if we have continuation selling going down here, maybe we are going to have a reversal trend that's going to go for a while. I have a target wick down here. This is back on the 19th of June at 1.1512 from a longer term point of view. We can get there today. Intraday, we have a lot of JAX levels and a lot of pivot numbers. At the bottom of the conversation right now, we see that S1 pretty close to the bottom of the London initial balance right there at 1.156. We're below the session VWAP right now, and this is kind of a new thing, right? We were below it, above it, below it, above it. Now we're below it again. Sellers seem to be in charge here. Double distribution, but still, this is a very immature volume profile, so I wouldn't get too overly worked up about it. But a lot of targets on the downside, too. We have that S1 again, and that could lead to a continuation breakdown of this market to JAX 4, which is 1.1525. So we'll see if we get some traction on the downside there. E-mini S&P, let's pull that up really quickly here. And again, we're just going to look at some JAX numbers. Let's let this kind of chart settle in a little bit right here. Kind of a nice point of control. We're right at the point of control right now. We established this as soon as pretty much at the end of the London initial balance, and that's approximately 64.38. Seems to be price happiness right there. There's a volume node deficit below there we got to keep our eyes on. And we're above that session VWAP again. So if you voted for bullish in the chat, you might be on the right track here. We do have a target up here. That 0 DTE call resistance level is right on my radar screen right here. It's also a 0 DTE gamma wall at 64.45. Above that, call resistance is 64.500. And then we have an R1 and a blind spot 3. I love when mentor cues blind spots align with another one of my levels. Oftentimes those things act as a magnet. I don't know if it's going to today or not, but it might. 64.52. That's on the upside. On the downside, we have that pivot we got to get through before we break the London initial balance. That's at 64.30. And then Jackson 1 is probably the most important level here at 64.25. And just really super quick here, I want to point out, and I'm a little bit, my eyes are on the Dow today. I know it's not something we talk about a lot, but United Healthcare, I think, came out with earnings today, and that's the big elephant in the room for the Dow. There's only 30 stocks in there as well. Look at these wicks. Wild wicks in the Dow today. So be careful. Nice point of control finally, but I don't think this volatility and wildness is over in the Dow futures for today. That is today's Edge Report. Back to you, Deli and Shai.
Thank you, Jimmy. We are now joined by Jim Bianco, president of Bianco Research. Good morning, Jim.
Good morning. Thanks for having me, guys.
Great to have you back. Always enjoy speaking with you. I want to start off this morning with you quote tweeted Damp Spring, Andy Constant the other day. This is something that's a little bit above my pay grade and probably most people's pay grades. Explain to us what's going on tomorrow with the QRA. This will be before the FOMC.
Yeah, so let's go big picture for 5 seconds. The Treasury Department is only allowed to issue bonds every quarter for whatever Congress agrees to or its immediate financing needs. And that can only go out 3 months unless Congress passes a bill to build an aircraft carrier or something like that in 5 years. Then they could raise the money for that. What I'm trying to say is they can't say, hey, zero interest rates like in 21, 22. Let's issue trillions of dollars worth of bonds because someday interest rates will go up and we'll be lucky that we have these low interest rates. They're not allowed to do that. They're only allowed to issue what they immediately need. So every quarter they do a quarterly refunding announcement in 2 parts. Yesterday's part was how much are they going to have to raise in new money over the next quarter? That's $1.01 trillion is what they announced. Tomorrow morning is the more important announcement. How are they going to raise that $1.01 trillion? How many bills, notes, bonds, Treasury inflation protected securities are they going to issue in the next 3 months to raise that $1.01 trillion? Now, why that's become an issue is because President Trump in late June said, I wouldn't issue any 10-year notes at these yields. I would issue only T-bills. Then presumably he'll put his guy in charge of the Fed. That person will cut rates to 1%, and then they can refinance all of those trillions of dollars of T-bills at much lower rates. Scott Bessent, the Treasury Secretary, echoed something similar to that a few days later. Now, the concern is that they're going to do something like that tomorrow, that they're going to say, all right, we're going to cut back on the number of 10-year notes. Trump wants to cut them back to 0. I don't think they'll do that, but they're going to cut back on that. They're going to issue more bills. The concern I have with that is the Treasury market is in balance. For all of the issues that they have buyers for them. Now, they could tweak it around the edges, a little bit more of this, a little bit more less of that. But if they want to come out and say tomorrow, hey, we're going to issue trillions of dollars more in bills in the next 90 days than you thought today, and we need buyers for them immediately. Well, there's one way you do that. You raise interest rates to attract buyers. There's an old adage in the bond market, there are no bad bonds, there's only bad prices. And so all bonds can get financed. They just need a high enough interest rate. And so the fear is what Andy was talking about.
Did we lose Jim for a second here? There we go. We lost Jim for a second. He's right in it. We'll get Jim back, believe me. What I'm going to follow up with Jim on it is...
Did we lose?
There we goes. All right. We're right back. Sorry, Jim.
Oh, I'm sorry. You lost me?
He's frozen. Yeah, you're back. Continue that great thought you had.
Oh, I was just going to say, Scott Bessent knows all of this. And he knows that this is negative for the markets. And hopefully he talks Trump off the ledge from doing something radical with the mix of Treasury securities that we're going to have to issue in the next quarter. So that's kind of the thing we're going to watch for tomorrow is, are they going to make a radical change to the mix in the Treasury bill notes and bonds that they're going to issue over the next 3 months?
So my initial thought in this is, so basically this could create short-term interest rates to spike. Is that basically what could happen?
If they do a radical remix
If
tomorrow.
they do this.
Right.
And what does that do across the curve? How does that impact all of the rest of the Treasury and bond market, if that does happen?
Short-term interest rates are the financing rates, are the funding rates. Anybody who borrows money, anybody who uses margins is affected by short-term interest rates. If they go up, they squeeze the banks. Repo rates go up, they squeeze the brokers. If you trade futures, your margins might go up. And they might go up they might go up soon. And then you might be forced to put up more margin money immediately. That's the risk you face when you start messing around with what we refer to as the plumbing of the financial system. You might remember in September of 2019, we had a plumbing financial system problem when repo rates spiked up one day because they had an imbalance in that market, and it wreaked havoc all over Wall Street. So that's the risk that you face in having something like that happen.
Yeah, I understand it much better now. Thank you for that, Jim. Or we're about 3-4 minutes out from data, but Shai, I want to get a question in with Jim before we get to data with you this morning.
Yeah. I want your thoughts on FOMC tomorrow. Now, we know that Powell has not, in his history of being Fed chair, had many dissenters. I think that's going to be kind of important and to see how many dissenters he does have. We know it's probably Waller, but what are your thoughts on that, and that what does that mean for the Fed going forward?
So two things. You're right. I think Chris Waller, who's a Fed governor, has set himself up to dissent tomorrow. And you're also right. Powell has had the least number of dissents in the history of any Fed chairmanship. He's only had like 5 or 6 for the 7 years or so that he's been Fed chairman. Maybe a couple more, maybe about 8, but that's an extraordinarily low number. Chris Waller, there's an old line in politics, if you're explaining, you're losing. And Chris Waller keeps explaining that he's going to dissent tomorrow, but it's not a political decision. Well, it is a political decision. You want to be on the short list to replace Powell. And if you don't dissent tomorrow, you've effectively removed yourself from the short list, because Donald Trump has made it very clear that if he does, not Waller specifically, but if anybody on the FOMC doesn't dissent from cutting rates immediately, that they're off the list for replacing Powell. So it is a political decision in my part that he's going to do that. So tomorrow they won't cut rates. We'll see if Waller dissents, which I expect he will. We'll see if Mickey Bowman, who's another Trump appointee on the Fed governor, dissents. She may. We'll see if any of the other Fed presidents dissent. They probably won't. Then the other thing is be at the press conference. Powell should be asked a lot of questions about why are rates at where they are? Why are they not lower? When are you going to lower them? And he should be, put in an uncomfortable position to be more specific about cutting rates than he has to be in the past. And I think that my guess is this is going to be a big rub, because I don't think he wants to cut rates. And I think he's going to try and push back on that. And then he's going to get mean tweeted at and all of the other things that comes with him talking about not cutting rates anytime soon. And so that's really going to be the most market moving thing, will probably be the press conference and how he explains the level of rates.
Yeah, I would agree. And, we talk about the Fed not being a political organization, but President Trump has done a pretty good job at making it one now, because it seems as though it's a campaign for whoever's going to be the next Fed chair. And, they all have to talk his book, what he wants. I mean, it makes it very, and like you said, Jim, even though they may not want to cut rates, or some of them want to dissent for other reasons, it becomes, an interesting moment right now in time where, who knows, maybe just nothing happens until then. What is it projected for rate cuts? I think there was like a 60-something% in the September one, though, isn't it, Shai?
It's 59% in September, and for tomorrow it's 2.6%. 2.6%. So
yeah,
nothing.
Yeah. All All right. Well,
So a
we're
couple of,
about a minute out from data. Quick, go ahead, Jim.
I was just going to say a couple quick thoughts on what you just said. The first one is the problem with the Fed is the Fed chairman decides where rates are going to go and everybody falls in line. So that's why attacks on the Fed chairman are so effective because he matters. You don't do that to the Chief Justice of the Supreme Court because, to say, I don't like the way the court is voting on certain things, so I'll remove the Chief Justice. It doesn't change anything because you've got 9 independent voters. If the Fed were to go back to its they started this in 1986 under Volcker, but if they go back to their pre-1986 way of doing things where you have 12 independent voters, go ahead and remove the chairman. You've only removed 1 of 12 votes. You haven't really changed anything. If the Fed gets back to that, that would be a good thing. The last thing I'd mention too, real quick on the probabilities, I've always said that the meeting after the meeting, which is the September meeting now, it will be until tomorrow, the meeting after the meeting, anything between 33 and 66% on the probability is effectively a coin toss. At 59%, we're still at a coin toss in September. We'll see what Powell says tomorrow to change that.
No, I think spot on.
So we
Shai?
had wholesale inventories came in at 0.2%, expected minus 0.1%, and retail inventories came in as expected at 0.3%. So not a huge market mover, but it does say we may be seeing a little bit of weaker retail demand in that wholesale inventory number.
Yeah, I had to check my data to make sure it didn't disconnect and make sure we were still live here because there's not a lot of movement on this. So yeah, I'm even looking. Let's see if gold did do anything. I mean, really, just kind of nothing. Jim, I want to get back to you and talk about the dollar. So coming out of the the latest tariffs with Europe, dollar strengthened, euro weakened. Really, just that's the trade. We were talking about that this morning and how the dollar is just really strengthening against the euro, and it could be just isolated in this current moment. But the dollar strengthening, I think, is a big thing because you've had a lot of shorts out there in the dollar. A lot of people have talked about coming out of the dollar, coming into Bitcoin, coming into gold, coming into equity indexes, coming into the euro. Thoughts on the recent movements coming off of the recent EU tariff situation?
So I'll use a technical term. Trump pantsed the EU with the trade deal. He got a much better trade deal than anybody thought he could get. So much so that the New York Times has now got a story out going, is this a bad deal for Europe? They're more worried about Europe than they are about the United States. And that's what I think has sparked the dollar rally, is because we got such a good trade deal, got such a good tariff deal out of the, so it's kind of the opposite of what we saw on Liberation Day, that when the market thought that we were getting too much tariffs and negative tariffs, the dollar fell. Well, we got a positive tariff story out of the EU, and the dollar has rallied. I think it probably will rally a little bit more for the next couple of days, but I've also argued it's sort of reconnected with interest rates, because prior to Liberation Day, April 2nd, it used to move up and down with interest rates. If you look at a chart of the 10-year, you were looking at a chart of the dollar index or vice versa. I think that reconnected it somewhere in like May, but at lower levels. So for right now, the dollar will rally a little bit, but if it's going to continue to rally anymore, you're going to need higher interest rates.
Excellent. And so I wanted just really your thoughts on this market in general. It's just been endless kind of grind higher. Are there any risks to this market anymore? or where do you see it going?
Yeah, two things. There's an old adage in trading, never short a dull market. And if you look at the MOVE index and bonds, the Merrill Option Volatility Estimate, which is the VIX of the bond market, it's at its lowest level since 2022, since the Fed started raising rates off of zero. That's, you could see that in the market, that it's very quiet right now in the bond market. It doesn't seem to do much other than moving about a 10 basis point range. So this market is winding up a lot of power here, getting ready to break out one way or the other. So the bond market, I think, is probably going to stay asleep for the short term, but over the medium to long term, I think it's poising for a breakout one way or the other. If you ask me to guess, I'd say it would be in higher rates, but we'll have to see. The stock market, I think the big thing that's changed in the stock market, this is not unique anymore, is the dominant player right now, I believe, is the retail trader. It's not a hedge fund. It's not an institutional investor. You can forget the Barron's Big Money poll. It's not as important as going on Reddit and figuring out what all the retail traders want to do because they seem to be the dominant player. Meme stocks are back right now, and that is going to continue to play along until something upsets this equation. So this grind higher probably will continue. Maybe if I'm right and we get a breakout to higher rates, that might be the thing that upsets it, but we'll have to see if that even happens in the first place. But right now, I think if you wanted to know who's behind all of this is retail. And the last thing I'll say about retail, in the plunge in April in the market, if you are a professional investor, you sold, you lost money. If you are a retail investor, you FOMO'd in and you made a lot of money. So retail has been winning over the last few months as well, too.
And we have to end it there, Jim. Can't thank you enough. I mean, this audience here on NinjaTrader Live and on YouTube is the retail trader, and I know they always get excited when you come on and speak with us. Can't thank you enough about explaining that QRA. It's always been one of those things where I see it on X, and I'm like, I kind of get it, but you laid it out perfectly for us today, and that's why we love having you on here, Jim. We really appreciate your time. Thank you so much.
Thank you. Bye-bye.
Yeah, that was great. Jim is
He's fantastic.
he's great, man.
Yeah.
And he explains things where I can get it, and he just gives it to me.
He
It's like, all right, I got it.
very, very well. So
Yeah. Hopefully you all enjoyed that. Please hit the like button and go and follow what Jim is doing on X, Bianco Research. Again, he's definitely one of the best in the business. Out of that data, nothing moved. I mean, hopefully it's not a prelim to what's going to happen the rest of today, because it does feel like it's like that. I literally had to check my data. I was like, is this thing on?
I know, right? It is the day before an FOMC rate decision, and so things that may have once moved the market may not move the market today. So we'll see, and then we also have non-Pharm on Friday. So
Yeah.
big week ahead as far as other data coming out.
Yeah, and there's more data coming out for the rest of today. So
I'll
stay
put
tuned.
that in the chat.
Yeah, and maybe we get some market moving stuff, but definitely tune in tomorrow for this QRA. This is going to be really interesting to see what happens from that across the curve. We'll be watching the bond market for that. All right, Shai, thank you so much.
Thank you.
All right, everybody, let's bring in the man. Pharm, good morning.
Good morning, Deli. I see you fell asleep on the buy button again. We've discussed this.
Yeah, well, it's I'm getting old, Pharm. I can't help myself. Although I got this young shirt on today, and I wore this to show my range. To show everybody that I'm not just a plain shirt wearer. I could wear it, man. Let's go.
Definitely a constructive looking night here. Yesterday was kind of a hangover day, wasn't it, Deli? It was like we had that big move overnight, and then just especially in ES, right? It's just like bulls were like, we had a little too much to drink last night. We'll come back after the close, and that's where we're at. And I think they were due that, right? And it's been a big move up, and really that overnight move on Sunday was kind of nuts. We talked yesterday about how it exceeded Friday's range basically. Pretty quickly in that session. So I think we can forgive them that. And, strong overnight session here into today.
Yeah, I'm actually going to start this morning talking about ETH when we look at the charts. I've been buying some spot ETH. It's small. I mean, it's like, I'm basically trying to keep myself active a little bit here. I've been able to get on too much of a position here, and I'm not using the futures because, again, I want to be able to really manage the risk overnight, and I don't want to be worried about it. I think if you're day trading, the futures are a much better place to be when you're trading crypto. You get the leverage, you get all of it. So the spot is kind of a boring thing, but nonetheless, it's been working out. And when I look at what's happening here in ETH, this is probably one of the most dominant daily trends I've seen in some time. And again, I've been trying to buy pullbacks, literally just using a simple moving average because you got Bollinger Bands expanding outward. And when I go and I look at what the old peaks were, and to me, this is unfinished business. And I talked about, I've mentioned 5,000, but when I think 4,500 is going to be a recent or a decent area to look for this market to head to as well. Why not? I mean, this is a crypto administration. ETH is now coming alive. I definitely think it's a little, little frothy up here. So I'm trying to stay patient and buy dips. But when I look at ETH, it's like, if you're a day trader, this is one of those markets where you heard Jim Cagnina this morning talk about, the volume continues to grow in crypto futures. And I just think this is like, it's a trend I could look at and I could see the possibilities of the targets. My time frame, I'm using spot on Kraken, but for futures traders, I think this is a market where, as you buy it on weakness. I mean, it just continues to work. And, it's one of those things. It's a very similar thing I saw in platinum earlier this year. We've seen it in Bitcoin, and these trends are working and they're powerful. Like, even with the dollar strengthening a little bit lately, it's done nothing to the crypto markets. I mean, Bitcoin futures are 120,000 still. So I like that. I wanted to start there. This is to me the main thing that I've been looking at is this euro. No positions in it. I'd love to see a bounce in the euro to sell. When we were looking at COT data yesterday, it's the most long large specs and short specs have been since 2022. And then when I go to the daily, you're now below the moving averages, this small little cluster of short-term moving averages. The longest term one is the 34. It's the first time it's been below it since the middle of or towards the end of May. Obviously, this came off of the tariff headlines. Not the easiest to kind of like jump in and do much for me, but I do look at this and start to think if this could be a trend that starts to go beyond just what we saw the last couple of days. I'd love to see a rally back up into the 116.90 to a low 117.40s, and I would look to start to get short futures here because it'd be easily for me to lean on the recent high of when the euro news came out, which comes in at 118.09. It's just hard. It's hard to really do anything in this moment because it came off of that announcement. But I think that this thing has got a lot of potential. It would not surprise me to see the euro start pushing well below 115 soon. So for perspective, this is a market that I'm looking at for a possible swing if we do get a rally up there. Looking at gold again, I don't even know why I had that box there. I was probably fell asleep on it, Pharm. But when I look at gold here on the daily, it's just, it's like, look at what's going on here. It's just sideways. It's just doing really nothing. I mean, when I look at it back from this high, and we're just in the same range. I mean, I know that gold is where a lot of day traders are trading right now, and I just think my thoughts are it's a two-way tape. I mean, you got moving averages so close together, and you're just got Bollinger Bands tight. Volatility is still pretty decent there, but no clear trend at all that I see in gold. Besides, obviously, if you go back to the beginning of the year, it's up. But for now, I think it's a two-way tape intraday. And when I get into S&P, I think this area, and I will start to look a little bit bearish if we can get up to 65.38. I talked about earlier, I bought some puts back in here. It didn't work out. I waited for a close above 63.04. I covered them, thank God, because we rallied 130 points since then. But sticking to my strategy, looking for a rotation, just not there. I mean, I'm going to lean more on you, what's going on in indexes. I look at indexes and just say, from my time frame, very difficult trade. I mean, there's just not a lot to do. I'm more focused on euro and ETH right now. Those are markets where I'm in ETH long, but I think that, if I can get a bounce in euro, I'd look to short it. But equity indexes, I don't have a lot to tell everybody. It's just like this drift higher. Maybe FOMC sparks something, but technically it would take a lot for me to get bearish on a pullback. But on a rally up to 65.38, 65.40, that's an area where I do think we will find resistance. This is this old Bollinger Band peak that I look at. I look at the RSI is 80. I look at this scenario and say if we were to get up there and I would see a good reaction, like it would come off of it right away, I think that that's an area I would look to be short. And I hate to be looking short in an upward trend like this, but it is what it is, man. I mean, it's just I can't be long because my stop would have to be, just way down there. So that's all I've got.
Yeah, I think that's right. I mean, with your trading style, and really, if you're just coming in and looking to find a swing, you're right. I mean, you got to find a way to define risk, and so that's where the day trader can benefit from converting a day trade into a swing. And we've talked about that before. I do conversion trades. I like to have my primary trading vehicle open at all times, but when you're in a rampant uptrend where the daily is framing higher, just every single day is a higher high and a higher low. If you get it in good on a given day, let's say you trade like 2 lots of ES, right? And ranges now, unfortunately, on ES are like 30 handles. So, let's say you get one off for 15, and then, you get about what you think the max range is going to be for the day at 30, but you kind of want to hold it overnight, right? Because like sellers haven't taken out a prior day low since like, I don't know, 1990. And so, you could sell that second ES, and then buy 5 micros or something, right? And leave that to run. And then the next day you've got your primary trading vehicle open still to trade. So I'll do that sometimes, but it does feel like that's kind of the best and safest way to get it in if you're looking to swing, is just execute with tight risk on a day trade and then just let it run, right? Whereas if you're just trying to swing some calls or something, you got to pay a lot of attention, and you're not going to sit there all day just waiting to find a spot. So that's kind of how I look to do it in these kind of rampant trends where it just continues to grind higher. I think you're right. Other than that, it's day trades. It's favoring longs. Really hard to fade price discovery, as we talked yesterday. Because you can see what happens. I mean, what the Nasdaq in particular is doing overnight. So I did start with that chart. It's been pretty strong. I mean, the Dow had a lot of earnings this morning. I think it was like UNH was down. UPS was down, Merck was down, and then Boeing, I think, was okay and was up a little bit. And the Dow held up okay. But like we've seen this last week, maybe this really crazy dispersion that's made day trading a little bit more difficult, right? You talk about this a lot, where like when all the indices are moving together in the same direction, it gets pretty straightforward. And you just pick your favorite vehicle, execute at good spots, and everything's fine, right? But we've seen a lot lately where, NAS will be strong for like an hour, and then it consolidates and sees a little bit of weakness, and then, YM will pick up and take over, and then like ES is just kind of doing whatever the hell it's doing, which, lately has not been a whole lot. So, it's important, I think, to be able to, chart multiple names. And actually the Dow has been like, YM has been a pretty decent trade lately at times. I might pop my levels on my Ninja chart tomorrow for that as well. But if you do trade the Dow, 45,107 to 45,135, time and volume above there, that I think you probably finally get a clean break to a cash hours all-time high. But here we are overnight with the Nasdaq. Had this huge lift yesterday. Again, we had the kind of the hangover day, and really for ES in particular. I think if I remember correctly, like right after we got off yesterday, we had traded above on ES. We had traded above Friday's high, like the whole night. And then like right after we got off, it sort of crossed back that lower distribution from pre-market, and then ended up opening back in range. So it did not open on a true gap up, whereas NASDAQ did. And that's kind of right in here. It held just above Friday's high, and you got this kind of consolidation between these two spots. Sellers finally, got through there, but right, didn't make much traction, right? So now you get their covers overnight. ES just kind of stayed weak and weak and weak, and then still had this overnight move, but it was definitely weaker than the Nasdaq. And then you see that again. Nasdaq is particularly strong right now, and given the earnings, like you kind of expect that to stay the same today, and maybe the Nas will be a little bit stronger. You do have this big set of overnight singles, technically 2 actually from this session. And so, again, that's just a 30-minute, price traded at, let's say between, what is that, 575-ish and 556, basically through one 30-minute period, right? So no other 30-minute periods have traded these prices. And so we do have on the 5, like we've got the volume point of control for the overnight session is up here. So maybe a little bit of profit taking. So we could see some weakness into the open. We've seen that a couple of times on NASDAQ and ES pre-market. But generally, if it's holding above these 523s, 540 range, it could come back and fill in these singles and still be completely fine. And I would look for longs there. If we do just dip down into these single prints, let's just say like 560s, call it 569 for good measure. Then we could just sort of hold up here, consolidate, take out this overnight high, and I'd look for these 640s today. This would put in like kind of a nice double distribution week. Like you can see, we've got this clean break away from last week's volume. down here, right? So I mean, the entire, yesterday's session was well above the meat of that distribution. And so the question here is, are we going to get a double distribution week to the upside? There's a lot of week left, right? In FOMC, are we going to fail this move and come back down into range? So if that were the case, if we were trapped back below these 523s, 540s, then I think we get a clean rotation back to, and at least 470s, 480s maybe. Come back into the cards. But, again, if you're just clean break away from last week, and then we build some volume Monday, we build some volume Tuesday, very, very strong. And it could give you a good trade to work with for tomorrow. I like working with developing double distribution weeks. So I wouldn't mind it if NASDAQ stayed kind of strong up here into tomorrow and just built out some volume. That might set up a nice trade for FOMC, particularly on catalyst days. I like trading double distributions or developing double distribution profiles, whether it's daily or weekly. So that is the cues. So again, if we're breaking away from yesterday's range, nothing to do but be long. It could open on a true gap up again above yesterday's high. So that's pretty straightforward. ES may be not as clean. Big picture, let me kind of zoom a little bit here. But still basically a breakaway from the meat of last week's volume, right? Still very, very constructive. We still now have the overnight high from Sunday night, whereas NASDAQ has made a new one. Again, you want to see these taken out. Like if you're looking to swing short or something from a high, you ideally want a cash hours high. The low of year was not a cash hours low. But like in bull markets, bulls tend to get away with a lot more than bears do, right? So I think you really need to see some kind of an exhaustion of buyers and a really, really good high. On the 30, this high looks good. This is what you want to see, like an upper wick and then a nasty rejection. You'd want to see that during cash hours. Ideally, you would see it on the 5 and the 30. Candle would look somewhat similar. But we haven't gotten that. We haven't gotten that, clear end of the upward auction. So basically your directional moves, your directional auctions end one of two ways, in my opinion. They end, technically just because there's, that last buyer buys top or last seller sells bottom. You get a nice excess. The market says we don't want to go that direction anymore, and you get a reversal. Or you get some new market generated information. And we talked yesterday about the fact that this week is just absolutely packed with market generated information. So there could be a change, or it could just light the fire to rip things higher. But broadly, this is constructive. Yesterday, we could not sustain above Friday's high. We just kind of faded all day while again, NASDAQ was just a little bit stronger. Here we are back above it now. Can we sustain at least Friday's high for today's session? Can we gap and hold above that? We've got yesterday's high was 34.25, I think. So again, a situation here we are like coming into the open. Are we gonna gap up above a prior day high and hold that into the open? So that's kind of my big picture. Before I drill into the 5, I'll give you a second to make some comments.
Yeah, a couple things. First off, when you talk about the YM, I think a lot of traders should take a look at it. I mean, one of the biggest differences with the YM versus like the S&P, obviously the 30 stocks to the 500 is the Captain Obvious one, but you don't have the 0 DTEs, so you don't have that, pin them into the close. You don't have that GEX data information coming in and moving the tape as much. And again, the 30 to 500 is an interesting thing because you have a better gauge of what's happening internals within the index. And so I think it's something that if you're an equity index trader, you venture off to the Dow. It's also smaller tick value, which I think allows a lot more traders the ability to do more scales, trade more contracts for relative risk, a dollar amount per trade. And so I don't love the way it moves, but again, some people might, and you get a lot of NASDAQ people that I think actually, might actually like the Dow a little bit. So I just wanted to point that out. The other thing is, when you look at the indexes right now, what I find to be, so difficult about them is just like exactly what you said. Is just there is constant divergences. You have us just kind of drifting and floating higher. The the low volume isn't really a big deal to me. I don't even know what the daily volume is. That's how little how much I pay attention to it. You could just feel it within the tape. You don't have to even look at volume to know that the volume is low. And it's just hard for, that mid time frame, like people like myself, to get involved, right? And so again, when our market's the most busy, obviously when there's more volatility, all time frames are executing. When you get into this type of divergent kind of market that's just inching higher, it's just really a lot of the short-term traders, and you've got the occasional long-term or medium-term trader like myself dipping into the market. It's like we're not in as often. And perspective-wise, that's hard for people to understand, but that's why the volume doesn't matter that much to me, because who cares? I mean, you just have less participants as you go higher because there's less price action, right? And it's going to take news or an event right now, something to stir this thing up, because it is still summer. And again, it's like, be small, be smart, pick your spots here. If you're a short-term day trader, stay in the game. That's all it's about right now. There's going to be moments where it's going to get busy. And I love the way you lay it out, farming. You're looking for these key areas, because it's like everyone has to really step back right now and realize that, a lot of things in front of us this week, we may or may not get busy, but we have to really put ourselves in a position to win for the long term and not get so caught up right now in the short term of this market getting highs. It gets exhausted. I know everyone says it. I see it in chat. Everyone knows the market's overbought. My attorney, I talked to him the other day. He's like, well, what do you think about this market? You know what I mean? He's just like, the whole world knows it's overbought, right? Like, so it's like, okay, be patient, right? Have a plan, stick with it.
Yeah, I mean, I'm a setups trader. Like, I'm looking for very specific setups, and if that setup doesn't present for me, I'm not taking a trade. And I'm going to share something. I mean, you've got a lot of people on social media that talk about how, there's probably a lot of bears that made a lot of money at the beginning of the year. They gave it all back trying to short. I actually had, kind of sad in the last couple of days, because I had, one trader, actually two over the last couple of months while I was on vacation, that really, really struggled. And it wasn't the fact that they made a lot of money in the beginning of the year and then gave it back because they were trying to short this all the way up. It was because the selection of trades has just not been very good. You get maybe one decent setup a day. And so if you just end up, if you're looking at pricing, you're like, I think it's going to go higher, and that's your reason for taking a long, I mean, probably not a very good reason. How have you defined your risk? What kind of range are you looking for? You just end up chewing up fees. Whereas, I'm looking for these very specific setups, and I would just rather not put my capital at risk. I did scalp yesterday in the morning, which I actually don't trade the open very often unless it's one of my setups is playing out perfectly. We had the true gap up on NQ, and I scalped it a couple of times long, got the breakdown, I was out, whatever. And then it was 90 minutes before I took an ES trade. And then it was 15 handles, whippy, and then done for the day. So just patience and selectivity. Those good setups will come. And you definitely want to make sure that you've got capital to play that. We're seeing a little bit of weakness here. NQ is dipping into its singles right now. I'm trying to kind of look at both. Well, I've got ES in front. So here we are again. Same thing yesterday, right after we were talking. ES fell back below Friday's high. So let's see what happens today, because it is below yesterday's high. Anyways, 34.25. I didn't mark that out. It has filled in its single prints. So those are no longer there. Again, you see you got this volume point of control shift up into this profile, which is generally assumed to be bullish, and certainly, building volume higher and higher is bullish, but obviously there's sellers taking the other side of those buyers. Sometimes that's profit taking, and you see these pullbacks, and I think that's what we're getting here. So I think, key for today, and especially after this move overnight and the fact that the Dow had some pretty bad earnings, and NQ kind of got a little ahead of itself, maybe, is sustaining this 20, I'm going to call it 29 to 31. 31 was Friday's high, so that's going to be key. Can we sustain above 31 Friday's high? But I'm going to give it to 29 maybe. And I think if price gets trapped under 29, then you're risking a rotation at least down to probably 20. And in that key weekly area that I mentioned yesterday, I was using 15.5 to 18.25. That was a long that I took, was here at 17. It was lost in the afternoon. And when I woke up this morning, I was like, well, I'm definitely not getting the setup that I would like. I wanted to see continued weakness in ES, maybe due to some earnings from the Dow, which were bad, and it didn't really turn over until more recently. Wanted to see some continued weakness just to sort of grind lower. We had a poor low on Friday. We had a poor low on Thursday. So I was kind of hoping we might come down in there, take those out, clean it up, and then reverse higher. So maybe if we see this weakness continue here in the open into the next couple of minutes, maybe that's a possibility. But to me, the first move is going to be all about 29 to 31. I will allow that instead of just looking at 34 and a quarter, which was yesterday's high. So if we're holding above 29 to 31, that looks very good for bulls to kind of find a clean break away from yesterday's volume, get back above yesterday's high, break away from Friday's volume. At that point, if you're above prior week's high, you're bidding this week's cash open. It looks good to me for a trip back up in here, probably into this overnight high. So that's going to be kind of like, I don't like to use pivots, but 29 to 31, I suppose would probably be my pivot today. So I would look for longs in here. And if we do get trapped back below, then I may consider a short back down towards at least like 20, maybe this 15 to 18, and like maybe get some runners down. I think it just depends on if the Dow names get really nasty and NASDAQ has run out of steam. I think that's the only way you see weakness. And other than that, you're probably looking for longs.
Yeah, I mean, if you see two indexes, right now, especially driven by earnings, start to go in one direction, that will likely have an impact on S&P. You never know, not these days. But again, I think the key is adapting to this tape, is buying the narrow pullbacks, reducing expectations. That's what it is. If you're going to be short, you can be short. Just don't overstay your shorts, because the trend is still up. And if there's news or there's headlines driving it, maybe there's some opportunity for some continuation. But for the most part, I think, it's just like we said, continue to come in, temper expectations, small and smart. I put it in my note every morning. That does it for us this morning, Pharm. Thank you so much. We hit 140,000 followers. I said I'm going to do a big announcement at 150,000. So we're 10,000 away, everybody. So hit that like and subscribe. Help us on our path to 150,000, where we're going to do some giveaways and some fun stuff here on the NinjaTrader Network. As you can see, that like and subscribe production's covering my hair. We're allowing it for the like and subscribe. But other than that, if anything else blocks my hair, that's it, man. You could block the shirt, you could block anything else. You block my hair, it better be for something good, and that is so. All right, Pharm. I'll see you tomorrow.
We'll see you tomorrow, Deli.
Good morning, Tanya.
Good morning, Anthony. How are you doing today?
Good. Nice trade yesterday. I was talking with Pharm about it, buying the narrow pullbacks, reducing expectations. You did a great job staying with it yesterday. I was watching that and I'm just like, you're adapting to this current market environment. It's not super busy. You didn't look for anything crazy. You waited for an opportunity. You traded it according to your plan, and again, I could have seen a scenario where you try to milk more out of it. You know what I mean? You caught them in a decent place. It was a little bit of time with you. But I mean, have you noticed that it's just like, making that full transition? And I know it's been a while since we were busy, but like really transitioning to this type of market that we have right now.
Yeah, totally. So yesterday what happened is I just basically took 20 points out of the NASDAQ and called it for my target. And that essentially was where we basically were like near the highs of the day, because just there was no juice to keep running or something like that, and it was kind of frustrating, right? Because I was definitely talking to ES like what's telling it to wake up, because you're definitely getting more of those divergences. I see here on the daily, NASDAQ took out yesterday's high here, for example, already, and ES did not. So that's already some major difference here I'm noting on the charts there. And don't totally so I mean, I'm not gonna be totally bullish if we're all-time highs. We already took out previous day high. It's kind of difficult to be remaining bullish up here. Yesterday was a different kind of story. We had a gap up, but then we were back into the gap to try to look for some longs, and we did have a small divergence at those highs. But yeah, what happened yesterday, I mean, I pretty much, yeah, I got rid of my longs here at like 521 area, and you could see on the 15. I mean, yeah, that's basically where we near the highs of that session. And we didn't like there was no more power to go through to go to the upside. We kind of just chopped around during the rest of the session. We completely filled the gap. And here we are today. Yeah, we moved a lot since yesterday's close. Well, what are we like 120 points higher right now? Yeah, in this market, yeah, gotta just adapt, because what's happening is that I just noticed, like, I love trading continuations. I love holding for larger moves. But if I'm noticing more and more, okay, like every time I'm holding my runners, I'm getting stopped out in profit or break even on the rest of my runners. It's not worth it for me to hold them anymore, because it's happening like every time that way. And if you're having small ranges, that's why it's happening, right? Because there's not a lot to work with. We're not having large expansions. We're coming back into the range. So then I'd rather just take the smaller trade, this play small ball, right? Take the easier trade to that first target, and then wait for more information from there. Like, and honestly, it's a lot better for my mental game at the moment right now, because there's just less ambiguity and less decision making. Where previously maybe I'd take partials and then wait to see the reaction at that high. And then, the market, you have to be super quick about managing the rest of your position. So that just adds a lot of more decisions if you're gonna hold runners or if you're gonna take them off and things like that. So that's how I've just adjusted recently. Yeah, I don't really totally love this divergence between Nasdaq and ES, and that makes me want to be a little bit more bearish. Guess we'll see at the open what ends up happening.
Why? Why does it
Why?
make you want to be more bearish? And you're talking about bearish Nasdaq or
Yeah,
S&P?
yeah. Why does it make me want to be more bearish? It's because like you just have such a large divergence here. We're already above yesterday's high. We already kind of expanded what 120 points to the upside in the Nasdaq. Rarely do we really have like a gapping, well, we do have gap and go situations at all-time highs, but if I see those divergences where ES is a lot weaker, I think we had it last week where Nasdaq was the weaker one. You just see a lot of rotations coming in, and if the market's not really sustained, like if I can't even get more than like what was it yesterday, like just that 15-minute high and then more continuation to the upside, then I'm not gonna like, I'd rather go for a reversion to the mean trade than a continuation trade. And if you have a divergence there, it's just telling that there's not a lot of juice in the market. Is that I'm how I'm picturing it nowadays and how
Yeah.
I'm envisioning it. Um,
I like how you talked about that, because I think when you see divergence, I mean, I've been looking at divergences, for many, many years. And I agree with you. A lot of times when you see divergence, it does mean more mean reversion than trend continuation. And so I'm glad that you explained it. And again, it's just we look at it a little bit differently, but you
Yeah.
come to the same conclusion.
Yeah, totally. Exactly. So yeah, I don't, yeah. I'm gonna be slightly more bearish today. I'll see if there's maybe I'll see at the open what ends up happening if we end up holding below like maybe pre-market lows for more downside to take out some of those trend line liquidity, just come back to like 5340s on the Nasdaq. But on ES, yeah, let's see. I mean, yes, honestly, like yesterday's low is not out of the question for ES and Nasdaq either. Just depends. We do have news today, right? We have a lot of news this
Yep.
week. Yeah, 10 a.m. news. Ooh, that makes me happy because I feel like last week there was barely anything. This week's packed. What is it for earnings? We have tomorrow is Microsoft and Meta after the close, and then on the 31st we have Apple and Amazon after the close. Okay. So again, I think that it's probably going to be a smaller range on the daily. We're having like 200-point ranges on the Nasdaq in total for the daily during like the AM session. I mean, yesterday I think it was like 60 points or something on the AM session, which is why, yeah, I'd rather go for mean reversions nowadays. I go for the smaller, like the first target, take my position off, then wait and see if there's another reversal or and another manipulation and a reversal essentially is what I'm trading. So yeah, I mean, I see a little bit of a 15-minute, break of structure here and 15-minute fair value gap. I'll be monitoring this, perhaps see if Nasdaq at the open maybe reaches into the 590s area and rejects from there to go for some more downside. So yeah, that's any thoughts on that, Deli? Or in general?
No, I mean, I'm with you. I mean, I just think, a couple things when looking the way that you're looking at the tape coming into today, again, it's let's see what data does. Let's hope maybe it does spark some interest in it. I mean, this morning, if you guys did not catch it, you can go and rewind and listen to Jim Bianco talk about the QRA. I'm not going to get into it right now. I'm learning as we go as well about this, but it's an important moment before FOMC, and I'll bring it up again tomorrow. This morning's data didn't move the tape much. Maybe this, the 8:30 data, maybe the 10 a.m. does. But again, unless we get some volatility, I think the number one thing is temper expectations. Like you said, adapt to this tape. If you're going to adapt to this tape, it's been by the narrow pullbacks, reduce expectations on even, extension of the rally. You've got divergence, maybe looking for more of a mean reversion type trade again today. And again, I think all of us, the whole world is bullish right now because if you look at it by any stretch, it's bullish. The only thing the only reason anyone would be bearish is just because they're saying it's gone too much, too far, too soon. And I always use the story of all some of my veteran trader friends. Whatever you don't think it could do at 5 days, it does it 10 days. If you don't think it could do it 10 days, it does it 20. I mean, the market is here to prove us wrong. It's our job to stay in the game for when the market is giving us, feedback that's conducive to our strategy. Most people don't talk about that as much. We can't impose our will on this market. We have to be there to take when it's giving and just don't give too much when it's taking. And so I think that's just the mindset I continue to drill myself. And that's why I like when you come in and you're like, I see a little bit more mean reversion possibly today, but I'm not, I'm going to be open to what the market gives me.
Totally. Yeah. Just, what's that famous saying? It's like, the market can remain irrational longer than you can remain solvent. Can't be a contrarian for too long, especially if it's an all-time highs market. But, yeah, if the only reason is like fundamentally it's that it can't just go up any higher, then you have a little bit of a bias to yourself versus like it's different than saying like, well, there's divergences and there's too much risk up here for me, like from where I'd put my stop, so it doesn't make sense. So it's definitely easier to just wait for, like yesterday, just wait for a dip in like the lower end of the range to be bullish and to find. I mean, even yesterday, yesterday I just took a small push up, like 20 points on the Nasdaq, and I was bullish and just took it off there. No more runners, and that's how I'm adapting essentially. It's like I need the market to prove to me that it's worth it to hold runners nowadays.
Yeah, I mean, the proof has to be in the pudding. I think more people should be looking at the responses to their strategies right now, and that's how you become a better executor of it. That, to me, is really one of the defining differences between someone who's executing a strategy versus someone who's actually a trader. And that's why when you talk with traders, and I've done a million interviews over the years, people have interviewed me, I've interviewed people, it's the same thing. I mean, it's why I also don't preach my strategy too much because there's nuance into it. I can't teach my experience of the in the moment decision making. It's very difficult. When I look at the market, it's like I understand where we are right now. It's like if I get a buy signal or a sell signal, it's like, okay, I understand this market environment. I'm not going to be super aggressive. I'm taking my risk down. I see what's happening. I mean, there's so much nuance that goes into execution that these times, everybody, I think the key is to understand this market environment and just get better at executing it. Don't force what was working, last week, last month, or last year. It does not matter. Right now, it's different. Get better at this moment. So this way you have put it in the memory bank. And when it comes back again, you're like, wow, I remember when we were like this. What did I do wrong? What did I do well? Here we go. I mean, that to me that's what this is about. Again, Kane will be on tomorrow. He and I talk about this all the time. He knows that my tweets are so much geared towards staying in the game because that's really what a career is about, everybody. It's not necessarily about coming in and just, making money every day. It's about staying in the game.
Totally. That was a great point. And yeah, longevity, like thinking long term just helps you stay even keeled in a market where it might be a little bit more frustrating. But like if you just have some like even just like logic statements at your desk, like one day doesn't make a career, or it's a new market, it takes time to adjust and things like that, like then it helps you regulate your emotions by thinking about the logic side of things.
Exactly. And we're going to end it here with that today, Tanya. Thank you so much for joining us. Like I said, we hit 140,000 followers, which is cool because we're on our way to 150,000. Yeah, and so we're excited about what we're going to do at 150,000. So we're going to have a little fun. We'll have giveaways and all that stuff. So hit like and subscribe. Never miss an episode. Yeah, that's right. Yeah, I know. I'm going to be talking next with Merritt. You won't be joining us in Chicago, but you'll be at the October party, which is going to be fun.
Totally.
Enjoy the rest of your day, Tanya. We'll see you tomorrow.
Thank you, Deli. Appreciate it.
All right, everybody. It's Tuesday. Got my blue flower shirt on for today. Don't know why. I just was feeling it. Why? Because it's Tuesdays. What do we do with Tuesdays? Oh, we have a lot of fun on Tuesdays. Hardest laugh I had in a long time was on Tuesdays. It's time to trade the open with Merritt Black. Good morning.
Good morning, brother.
How you doing?
Just living the dream. How about yourself?
I'm doing great. I'm excited to know that you will be in Chicago with us. We just put the link in chat. Next week, me, you, Kane, Stowe, a few people from the NinjaTrader live crew will be there. Pax will be there. We're going to have fun. We're going to have a meetup. Kind of threw this together kind of last minute because I was going to be in Chicago for literally just 48 hours. But I'm glad you're going to be coming. We're going to have a lot of fun.
Yeah, man. I'm looking forward to it.
Yeah. So coming into today, we all know it's the day before the FOMC meeting. We had the EU tariff news this weekend, got the euro a little bit busy. I was actually thinking of you. I'm like, I wonder if Merritt, because I know that, you're one of the guys that come on here, and you're trading multiple markets. Indexes have not been super busy. Euro has gotten a little bit busy coming off of the EU tariff announcement. What did you trade yesterday? What are you looking at coming into today?
Well, I'm on vacation. I did not trade yesterday. So I'm a bit disconnected from everything that's going on. I know that we've had the reaction to the sweet deal with Europe. But other than that, man, I don't have any strong convictions about anything here today. It's going to be kind of like bar by bar, see how it unfolds. I agree with what you guys were talking about just a moment ago with kind of how it's kind of a make it take it environment where, especially in indices, some of the runners and things like that can be a bit more iffy, a bit lower success rate on those, which is fine. I always tell traders, look, you can stick with a process, you can stick with a strategy through an environment where it quote unquote underperforms, whether that means you're losing money or whether that means you're just going sideways, kind of churning. you can stick with it, and that could actually be okay. I think there's one type of trader who should do that and really not deviate and really not try to be a Swiss Army knife of trading. Not everyone has to do that. You can have a month where you kind of underperform and where your system really doesn't produce big R multiples. That's fine. That's part of trading. So it, on the other, just to finish the thought, on the other side of things, you absolutely can try to, as I say, kind of have a few more arrows in that quiver that you can apply a scalping tactic towards, apply a swing trading when the market is conducive to those things. So it's not, as always with things in trading, it's not a one size fits all for everyone, but it's important to understand, like we talk about every week, what are the conditions, what's working. Right now in indices, shorter term is a bit better, unless you're holding from the lows and just sipping pina coladas.
Yeah. Then God bless. I mean, better than me. It's not been the easiest. Again, that's why I have buckets where I have long-term portfolio. I'm pretty much always long. And then I manage some of my own money, and then I have some trading money, right? And so I look at
Yep.
that and always into buckets. And when I get into my time frame right now, which is I'm definitely become almost only a swing trader. Although I was doing some day trading earlier in this year, but again, it depends on the environment. Like right now, it's like, and Merritt, I know you put a lot of time into the swings, and you were doing, a lot of
Been
time,
a frustrating year for me on
focusing
on
on getting,
that front, for
yeah,
sure. I was bullish when everybody else was still scared. I was really looking to pounce hard and had some dry powder and was really looking to deploy it. And market just didn't give me access. It just never gave that type of pullback that I look for to define the risk and to load up. And so I missed this up move, but it's frustrating. But hey, again, these kind of things are part of
yeah,
it.
yeah, it's exactly. And when you get into a situation like we are right now, it's like, the only swings that are even coming up for me are shorts, which I don't love. I took one a couple weeks ago, I think it was, and it was like, I bought a couple of puts, and I was like, okay, whatever. I took my lumps, but I'm not going to fight this either because that's why people. I don't think the volume really matters that much. It just means that there's just less participants because there's less opportunity. Volatility creates opportunity. That's when you're there all day. Even people like myself, I don't look at time frame as much. Like, oh, I'm trying to look for the perfect swing. It's now price opportunity. We're not getting a lot of price opportunity. So adjust to it. If you're a
Unless you
short-term day
go
trader,
outside of
well now,
indices, right? You have this, you have
exactly.
the bonds that are in an interesting spot where there's that mean reversion type play until something really changes, then there's going to be a trend. You have grains, a lot of the ags that are really beaten up, and I like some of the mean reversion plays, a different type of mean reversion play, not fading back to a fat balance area, but actually coming off of some real extreme lows in some of those markets. So there's absolutely opportunities out there right now, and I think that we've transitioned from a nearly impossible swing trading environment where the vol is so huge it's taking everybody out, um, to a really nice swing trading environment right now. So, and the euro, the pound, some of the currencies have offered some pretty good
Yeah.
setups lately. So yeah, there's things out there. It's just not U.S. stock indices. But if you're scalping,
Yeah. That's for
there's
the day
still decent
traders.
enough range there to take a few legs out of the market each day or something.
Yeah, exactly. The only position I have on really right now is I'm long some spot ETH, and I don't know. You don't trade crypto at all, do you?
Not really, no.
Yeah.
Bitcoin
And
is
the
certainly
thing is with
a
the spot
market that's
ETH,
in my chart book. I keep up with it. It provides some good setups, but I'll put it this way, Deli. I wasn't trading digital horses like you were, breeding those puppies. That blew my mind. I remember
we
we were at your club
listen.
in Naples, and we're up at the bar, a couple of Tito's. Deli's talking to me about these digital stud horses he's breeding, and he's got the Kobayashi, the heritage from some type of bloodline, if you call it. I told people for weeks about that. I was like, people are doing this. They're breeding these things.
Yeah. Z
It was
dot run. I mean, I had over $100,000 of horses, digital horses. I mean, probably almost 200,000 or something like that. I don't even
yeah.
remember because I was buying ETH like a madman.
And then you were
And I'm
loaning
buying
out
horses for like
the ETH.
$25,000.
Yeah.
Yeah.
And then you were getting
It
like
was
12% on the however that works.
yeah. Yeah, well, we got to get into that one day. That would be a funny conversation. That's why I can't wait to see you in person. All the good stories come out of all the things that we've all been doing. So
We'll
I'll
have
leave
a
it
good
to you
time.
here again. Can't wait to see you next week. Love that you're seeing that you're trading on Tradeovate using the web version here on NinjaTrader Live today. Make sure you guys go and check out what Merritt is doing at Apteros and follow Merritt on X. He's my guy. I'll see you on Tuesday.
All right, brother. Looking forward to it. See you. Good morning, chat. How are we? Any of you guys going to be in Chicago? Come say hello. Exhausted. I'm a little bit not 100%. Maybe wife and I may have split a bottle of wine last night at dinner, so a little cloudy. Yeah, this is my mobile setup. I've got a couple different screens. The one we're looking at here together is just kind of a execution, just monitor and have some charts up to take care of business. I tried one trade before the stream. Yeah, we should talk about that, A-Lock. So let me finish this thought right here. So kind of an unfortunate scratch. I did get long off of this turning point right here off this low. And oh look, oh yeah, you can actually see it. I didn't realize that. Um, I bought the turn off the low. It came up. It really stalled out for a while, and then some sellers kind of pushed it back down. And I had just been kind of trailing up, kind of fairly tightly. I don't love trading from the middle of DVA. And we had yet to actually touch Globex VWAP right below here. So I actually scratched out of it. Would have been a good one, but during times like this, I find myself getting a little more protective of positions, and that's going to mean that I'm going to miss some of the ones that would have worked if you'd be more hands off. And and to make a point on that, I think you can actually go one of two directions in conditions like this. You could actually go, I'm going to talk about it from an extreme perspective. You could go so far as to scale into positions and really have real wide stops and really take what you're given in terms of smaller movements and favorable stuff that you get. We could talk for an hour about pros and cons about that. You get in with 1/3 of your full size and then it just works and you're like, well, I didn't make very much there. Then you get in for full position and it works. So there's pros and cons to that, right? It really changes your equity curve, if you will, for doing that. Or you can do like I've done a good bit, which is to tighten things a bit more than normal. So adjustments is a big topic for traders as market conditions change. And since we've been doing this NinjaTrader stream for what 3 months now, is it? We have seen both tails almost of extreme conditions. So a lot for you guys at home to learn from and whatnot. Now, oh yeah, so I learned this from Dr. Steenbarger. So I had mentioned earlier, had a little red wine last night, was feeling, just a little kind of foggy, not like super, there's no problems here. We're all good. Um, Dr. Steenbarger taught me that you want to be assessed to be in potentially 3 different places as you do kind of a self prep, which probably most of you don't do. You want to do a self prep just as much as you want to do a market prep before you trade every day. And part of that is asking yourself, am I good to go today? Me. Am I sick? Am I tired? Am I hungover? Am I super emotionally upset? Are any of those things going on in my life right now? And you really want to fall into 3 camps. Number 1, we're all good here. There's no issues. Let's have another good day at work. Number 2, I am a bit off. Maybe you're recovering from a cold. You're feeling better. You're a little, out of it. You're not 100%, but you're okay. The approach there is to kind of be conservative in your efforts. It's to say something like, I probably won't take a trade today, but if something that's such just teed up for me, just perfect for everything that I do and look for, then I could take that trade. And if that doesn't work, then I'm probably done for the day. Something like that, where you really are super selective. And if a fat pitch shows up, you're there. If not, you're not going to grind all day and make some exceptions and just really do anything like that. And then thirdly, if to the degree at which you are sick, upset, tired, whatever, is enough, high enough, bad enough, it's a no-go day. You say, I am in a spot here where I don't need to be clicking the buttons today. And you go do something else. And probably you're making money by doing that because you're not lowering your equity curve to come in the next day and try to make up. Not that we try to make up P&L, but the math remains. You have to get to a new equity high, you have to make it back. So that's something I've found super helpful from Dr. Steenbarger over the years. Self-prep, 3 categories, think of it like a traffic light: green light, yellow light, red light. Okay, so since I've been rambling, we have had the open in Q. A bit squirrely with the tape at the highs here. Bit of a passive buyer present in the market. Just went long a couple. I'll scale quickly, half. Place a stop below here for the second half. I'm going to place the limit order right at above the highs there. If I get that on like a little stop run, then we can be flat. Boom. That was quick. Do you still think I'm too foggy, Ecos? Hey, Gendra, good to see you. Thank you. Yendra is a future Apteros trading desk stud. You heard it here first. Recent advanced group mentoring student graduate, and just a great guy, a hard worker with a lot of skill. That passive buyer is showing up again in NASDAQ right here. Even at this high, you have all this selling, and that passive buyer is just holding that bid. I'm at a little place called Sea Island. If you know, you know. Fantastic place. Tough spot for markets to just continue pressing higher. Again, you just saw me. The only trades I've taken today, right, were long from right here with the scratch, and then this long that we took right here into kind of the new high. So you have to be able to compartmentalize order flow, scalping, short term, speed of tape, all those kind of things. You have to be able to isolate that if you're going to do that at times, because everything inside me says, well, yeah, I was actually thinking, Crudele said something earlier as I was listening before my segment here started, about how everybody's bullish, and I was like, not me. I was like, I'm bearish, just because I see markets, and the way that I do that with NADRO is I look for risk reward asymmetry. Where's the risk reward skewed? And sure, anything can happen at any time. We all learned that from Mark Douglas. But to me, risk reward asymmetry is skewed to the downside right now, right? I don't think it's ready yet. It's a very, very low probability play. But as Jim Dalton, I believe I learned it from Jim Dalton. I can't remember if it's Jim Dalton or my favorite, Don Jones, but they talked about a lot of times where the risk reward asymmetry is greatest, is most in your favor, is actually the times where the probability of the trade working is lowest, is worst. I find that to be true. And I think that's coupled with my execution style, as many of you at home don't like. Some people are like, you make me nervous, bro. Um, or they find it hectic, when I'm scalping, it's kind of a frenzy at times, as you just potentially just saw from that last execution. But anyways, I find that to be true. A lot of times where you have risk rewards skewed the most, it's some of the hardest places to work into the trades. It's some of the lowest win percents that you'll find, because whether you call it being an early adopter, or whether you call it catching a falling knife, or whatever you call it, right? I think it's a real dynamic. I I really hate to Bobby, it's not for me. I'll put it that way. And I think there is, I'm not saying that any tool out there can't be potentially good for someone, right? Because the tool needs a job description. It needs to fit cohesively within your overall methodology and all the other things you're doing. So, for example, if you used stochastics on like a dip, right? Like it has to go below a certain level, and if it turns up, it's a buy signal, right? Well, if you also did MACD and RSI, and that was the system where you look for those dips and momentum shift turns to buy, there's too much overlap in how those are calculated. They're kind of the same type of oscillator, if you will, based on where is price relative to recent range, right? That's kind of what most of those are to a degree. MACD being smoothed out because it's where's one moving average relative to another moving average over the past time, right? So when you add something into a process or methodology, it needs to add unique value. It needs to stand apart. It needs to have a job description. It needs to do something for the system that's positive. Also, keep in mind any filter you add, which anything you add is a filter because it says don't do something here and do something here. And then you're trying to match up a bunch of checkboxes with other filters. So any filter you add potentially throws some babies out with some bathwater. Any filter you add will cause you to miss some trades that without that filter would have been amazing. So that's the pro. There's no free lunches in trading. Everything in trading is a trade off. Protect the babies. I agree. So the thing that to get back to Bobby's question, the thing to get back to with that is I think there's also a problem for many retail traders, for many traders in general. I just think retail traders are more susceptible to it. Where you go shorter and shorter and shorter term, the flashing lights, the pretty colors, the awesome, oh, I can see like the algos at work and see like the most granular, tiny little details of the market. The further you go to that world, the harder your life gets, the more you get emotional responses to the lights and the bells and the whistles and the little short-term oscillations and things versus um, putting together something that's a bit more repeatable and robust and you're not entering into that world of really competing against the algos for good trade fills and stuff as much. So I'll shut up now. Moving averages, I'm not a fan of anyone who thinks that moving averages are like ideal trade locations or a moving average crossover is a good signal with edge. It's not. Am I against having moving averages on your charts? No. They could be a good visual for you. They could be a good framework for understanding the speed of movement, right? Um, they could be, yeah, just a good reference for understanding where the market is and having some form of mean reversion idea and things like that. But a moving average crossover, for example, we could just back test it like that. And guess what? If you and I could back test it like that, the smartest people in the world have already back tested it. And if there was any edge there, they would have extracted it and it would be gone, right? It's almost like weak form efficient market hypothesis, which obviously I don't fully buy into. But that is in its most simplest form, I think what that could represent. Seller's pretty aggressive since this high. Good bit of sell delta. Absolutely HK. I constantly go around saying things like, in order to become a winner, at first you must become a great loser. There's a shift in thinking in order to do that. I talk about the natural human trader in my teachings, the natural human trader, how we all kind of show up with like standard societal human stuff, which is not suited for trading well, and what I call the evolved human trader. So people in our community talk about NHTs versus EHTs. I mean, Mark Douglas, you won't be successful in trading till you change your thinking, right? Um, it's a universal concept for anyone who's been around trading for any amount of time. You understand that it's a requirement. You have to change your thinking in order to be a good trader. You have to go against natural reactions and tendencies. Just got long here. Just another little pullback, momentum shift. Something doesn't feel good about this one. Can't put my finger on it. I'm going to go ahead and scratch out of it. Didn't get any momentum. It was just kind of wobbling there, and sellers started to kind of show back up. So nice, nice exit. We do have news in, just 14 minutes or so. Big passive buyer kind of stepping in right there. I'm going to try it once more. And I'm going to scratch it once more. We'll probably go into kind of a hold off period here until the news. Still, we're not quite inside even like the 10-minute window, so it's certainly still tradable. But market's getting a little herky-jerky, a little squirrely. Good morning, Bolivar. Yeah, I wouldn't be surprised if some of the tech stocks are kind of melting here. There's a lot of selling pressure on the NQ right now. I saw a little bit of passive buyer, a little absorption of those sellers. But that the reason that trade, kind of two attempts with the scratching out there, didn't work is because the sellers just continued, kind of being relentless into that area versus a little bit of a squeeze. Sometimes the sellers try real hard. If they're absorbed, then they squeeze them, right? Market headed back towards VWAP for the session. Remember, we talked about that earlier from where I took that first long before the stream. I didn't like that we hadn't quite touched VWAP, so that's kind of what we're coming in here to do now. There it is. And you see the boom, huge amount of order flow and whatnot as we move into that after not quite doing it before. Constantine says, why not short it? Well, I don't just press the sell button when there's a bunch of sellers. That's not how I operate. We need to look for, an actual scalping setup, which we very well could short at some point in the session. I'm not against that. It's just when you see a bunch of aggressive selling, that in and of itself is not not a reason to just be short. A lot of questions in the chat about passive buying and selling. It's one of the most basic order flow concepts out there. If you have one side of the tape that's being aggressive, so in this case, sellers slamming the bids, and you have price that's not going down to a similar degree, right? Or maybe not going down at all. That is because there's only one reason how that could happen, and it's a limit buy order, a passive. They're passive, they're resting, they're sitting there versus the active people who are saying, what's the best price I can sell at? Oh, that one? Yes, that. I'm going to sell, right? That's the aggressive side of the tape. So when the passive side of the tape dominates, sellers are pressing as hard as they can, but they can't get price to go down. That's because of passive buying. And the way I teach things in with order flow is there's a couple phases. Number one, when you first see it, it is a signal. So for example, passive buying is a bullish signal. However, if within a rotation or two, you don't see the squeeze of them, of the now trapped sellers, you go back, you flip back to our original order flow usage, which is to go with the view, bullish or bearish, right, of the order flow, back with the aggressive participants. Need to plug in this computer. Let me grab a is an outlet. See. Wonder Trader is in their underwear. Thanks. Thanks for that visual. Perfect traversal of our intraday developing value. I did get short here. I just scaled out of half of it. Really don't want to be trading right now, as I mentioned, in front of this news. Not a trade I'll still be in. And there's a little bit of buying there, so we'll just come out of it. I really do need to find an outlet to plug. One second. And you see there's a little, bizarre little spike there. That's kind of that pre-news. So we'll sit back here for the next few minutes. Nothing I'm really stalking here. If anything, gun to my head, I'd be long off these lows and looking to hold that for a move higher. So that might be something I work into. depending on what the news does and whatnot, of course. So a good question about AI potentially changing markets. And I'm by no means an expert or even qualified to answer that question. Um, but let's have a thought experiment here for a moment. We know AI is fairly sophisticated at this point. What industries do you think are at the absolute forefront of AI implementation? Let's come up with the two top industries. We got some guesses in here. Manufacturing, healthcare, tech, finance, law, medical, legal, healthcare, arms and healthcare, software, pharma. Where is the absolute utmost money to be made from? I'm with you guys who are listing finance. I believe that, you know, Jim Simons, rest in peace, but his crew at Medallion and whatnot, and the things that are going on from BlackRock to all the way to Millennium and you name it, right? There's probably things being done there, and guess what? You and I are never going to learn about it, maybe until maybe 30 years from now. They're like, oh, yeah, we were doing that then. That's what the reality is. AI is already in markets. It's already beyond anything that you can access with some LLM that you can subscribe to or use or open source one, DeepSeek, whatever. The forefront of it is already in markets, I can assure you. So my answer is I'm not worried about it. Obviously, it's going to get better. There's going to be, you know, you know, progression and things like that. But if you're a technical trader, be a technical trader. Come up with some really good frameworks for identifying risk reward, and then you're throwing darts. You're flipping coins. Skew risk. Come up with some really great risk rules and things that can keep you out of trouble and keep you in the game, positioning yourself to get lucky next time, maybe. Yes, I'm actually an AI. This is my AI agent doing the stream. I'm actually playing golf right now. I love that. I played yesterday. Isn't that the goal of mastering anything? To get out of more work? Except for mastering sports and hobbies. Oh, somebody asked about my referencing the other day of how it's just huge things coming from Apteros, and they asked for a little spoiler or teaser or something. I just can't do that. There's too many bad actors. There's too many sharks circling. It is absolutely crazy. Um, can't do it. You sometimes I'm not the kind of guy who plays things close to the chest. I'm really not. I'm more of an open book guy. But I have learned through some terrible experiences that you can't let your enemies know what you're doing. So who knows? Just got long. It's kind of stalling. Kind of not looking great. Scratch out of it. Hop back in. Come out of it once more. Keep having this thing where there's a momentum shift, there's buyers there, and then the sellers take it right back. So might be looking to kind of clean up kind of the lows here. Like that. Back in the long. I'm working that order above that last little swing high. So I'm out of a third that got filled. Would be a good spot to take some off, right around in here, taking out this little high if we can get there. Put some stops in so I can take my hand off the mouse for a moment. Not sure what's going on right here, but there's a bit of a small battle or lull at least. Buyers pressing. I think there's a small passive seller right here. Yeah, I'm going to scale out of another. Check back in with the chat. Feels like the bottom is about to drop out. Not sure when that post was made, but I don't. Yeah, maybe it was that short-term little thing we were seeing to take out that low that I was referencing. Who knows? I see you're atop of Booker. Do you ever feel like you're missing anything not having the depth? I do not. Again, that's kind of that question that Bobby asked earlier about all those much more like market quirks and just super short-term stuff. What's going on with orders? That is a stumbling block for, I think, more traders than something helpful. Unusual long location. It's from the -1 standard deviation. It's after a little stop run. That's pretty bread and butter trade location for me. That's not unusual for me, MW. Da, 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 da. So at this point, this up move is what I would call belabored. It's not flowing nicely. It's hard for the market to go up despite the level of aggressive buying on the tape. So a little bit of passive selling stepping in and kind of making things difficult for the buyers. We are in that market environment where I'm not just blindly leaving runners on and no questions asked. I would love to hold some long from here. I'm going to give it much more of a shot than you've seen me give any trade here so far. Yeah. And I will be back in 30 seconds. That's a good one, DD. I like that. nothing's really changed. We have not seen sellers really step in since we got long off the low, but we've certainly again seen that belabored, as I call it, up move. Probably sellers turn to take over right here, and we start to see some selling. Let's see if we get lucky. If they want to get close to pressing those lows, I'm actually going to move this order up a touch. Just to not have like a stop that, there's going to be a lot of stops through the low of days, right? So I don't even want to flirt with that slippage and that area. So, even my little algo did fire off and give a bears are taking over off this high right here. But the way you manage kind of somewhat of a runner like this is different. You don't react to every single short-term shift on the tape or short-term shift in price. You give it a little bit more of a chance, as I said we would do here. Physical desk. It's definitely coming. It will be in Nashville, Tennessee, possibly just south of technical Nashville, Tennessee, but Franklin. It's definitely coming. You definitely can't beat being in the same physical space. At the end of the day, we are physical beings. We are human, and we do our very best at Apteros to try to replicate some of the benefits of being in a physical space together, and attempt to do that with chat and voice and different things. But you can't beat looking another human in the eye when you communicate, right? You can't beat being together in some of those simple times. Grab, around the water cooler, let's say, right? So 95% chance we get taken out of this attempted core position here. Okay, so we're flat. That's gonna hurt if we end up getting bottom tick there, because again, the reason I put the stop there is because I thought if we got this low, we would run actual real stops below the lows. So unfortunately, that puts me stopping out in a rotational market at the -1, which is never a good feeling. I stand by the decision. It just sometimes it's uncomfortable. You know, AQ, I think that there's a lot of people right now that feel the same way. And to quote AQ, that he or she says, I would rather prefer being in my underwear and eating peanut butter alone in my room. And I think that's very a big part of younger generation culture right now. They want to do that. I'm gonna hop back in this thing. I am really I'm a bit torn, to be honest. I still think the lows are now vulnerable based on how low we got. Yeah, yeah, yeah. Shorting. I'm playing the stop run. Got a bail on it. Was looking for something to happen a little quicker, a little smoother, and there's again more passive buying activity, kind of holding price from just moving freely. So started to stall and kind of turned, so we stood aside. Did not take out that low. Working into the short again, trying the stop run once more. Maybe the market got too short. We'll stand aside again. So I'll probably go hands off here on trying for the stop run because that is a bit of a, much more kind of short-term scalpier play. Um, I still think that the stop run is going to happen, and I still think that we never know what's going to happen, to be clear. Um, but I do think that these lows are super vulnerable, we'll put it that way. But I took a couple stabs. It's just getting a little too messy. I've lost too much money recently in my trading to actively when it's too sideways and messy. So for me, it's going to be hands off. I probably won't participate in the stop hunt here. Um, but once that clears the lows, if and when it does, I do think that I'll be fully ready to potentially stalk long again if we start to see the buyers really respond from the area. Kind of pitiful. We did we did run some stops through the lows, but boy, was that low energy. Just absolutely no kind of capitulatory feel to it. It didn't feel like it grabbed a bunch of people. It didn't feel like there was new shorts piling in on the new low. You didn't get the sense of any of that happening yet. There's a lot more of a frenzy there. Sound like a pirate. There. Great recognition of the vulnerability there and being bullish, but still, again, compartmentalizing the short term to look for those shorts. Just couldn't time it correctly. All right, long. So we let the stop run happen. We let that energy fizzle out. Seeing buyers lift it a bit. So this is all part of the same plan, same bullish idea that I've had for a while. The shorts were only a shorter term thing, trying to make some money off of this stop run, which was pretty apparent. So now that's completed. We're back onto the kind of the main thesis. This market's just super annoying. It can't release. It can't turn loose. It's just so tight and such a two-way kind of tape. Place a limit above these highs right here. It's kind of a decent spot for a first scale. Kind of stalling. I'm going to try to take it earlier, cancel the other order, adjust this. Crappy conditions. Almost really nailed it today. If we could have gotten a little more lucky on the short stop run instead of giving back more P&L there, and then if we could have caught positive P&L there versus the losses, and then catch this one, could have been a really solid day. Just kind of a hum ho grind right now. We're trending down. No, there is no trend for my intraday definition. We are rotational. We are sideways. But it just depends on your definition of trend, and I think that's an important point to make. You need to have a definition of, is this in an uptrend, downtrend, or sideways? And for me, the definition is very clear today: sideways. I use VWAP with 1 standard deviation above and below to make that determination. We call it our developing value area on the day. I say we, I'm just talking about NADRO practitioners. Really vulnerable stops above this little area. Might play a small ad to try to hunt those. If and when I think appropriate. All right, initiated the ad. Took off some. Pretty hard to believe they couldn't push through that level. Pretty pitiful. Still have half of the add-on. Got that limit order resting up there to see if I can get the quick blip through the 1, 2, 3, 4, call it 6 highs. All right, now I'm out of all the add. I'll cancel my add scale out. Average price is from where I added. My average price should be from down here. You know, for a last in first out method, but this is a first in first out. So I've placed a buy stop near the highs and a sell limit above the highs to retry the stop hunt. Sellers are really in control of this tape. I'm just going to cancel that for now. Just take it off the screen. Back in the ad. Scaled half the ad. think one thing that could be a takeaway for some of you at home watching me today is just being aware of where those key stops are. I was unsuccessful at profiting from the view of that into the lows, but I tried, and that's just part of the game. Um, but did a good job here of with the highs in atrocious conditions. But we all knew that that's what we were most likely in for here today. So I'm going to take out of the rest of the ad right there. I'm back to kind of the core position long from this low of day turn. Pretty crappy stuff here. Given the lack of buyers' ability to do anything more than that basic, tiny inside prior range swings, and then run out of energy and sellers start to take over, I'm going to scratch out of everything. A good fight there, a good body of work, putting myself in a position, not risking a lot, but putting myself in a position to make, a substantial amount if buyers could have made a decent run up to take out these highs, getting back, um, uh, you know, into VWAP even, like that type thing. But super chop fest. But again, like me being up $200 doesn't matter. Doesn't matter if I was up or down. Again, what I just said is what matters. I was positioning myself, even getting a little aggressive with ads, but then being very conservative with how I handled them, not sticking around, not willing to really lose much on the ads. Um, I really put myself in a position there to where if the market was conducive, like Crudele talked about, to my strategy, if my thesis played out, I was going to make $2,000-$3,000 there, right? Versus a tiny risk compared to that potential. There is a real potential that developing value low just continues to hold here, and it was just really, really messy as it hung around that lower deviation. However, for me, being an auction market guy, the concept of something of like a poor low starts to step in here, where if this was such a good long trade location, why are buyers not showing up? Why are buyers not aggressive enough to take us away from this area? Anything can happen anytime. We might go up in a straight line from here right after I kind of scratch the position. That's just life. That's trading. Um, but the rationale, the logic that why aren't buyers responding here? Why aren't they leaning leaning off this area and doing anything from it? And for me, a lot of times in these situations, I use order flow as something of a tiebreaker. And I don't care if it goes up in a straight line from here. Buyers have not shown anything from this area. So probably going to be it for the long attempts at this idea. I hope that makes sense. I think there's a lot to learn from that. You're going to have days where the market doesn't cooperate. You're going to have days where it's mushy, it's muddy, especially in kind of all-time high stuff like this. What matters is that you position yourself and you manage risk well. You be a great loser and you use your skill sets and your process to position yourself to profit if it works. And that sounds simple. That sounds just super straightforward, but it's a big deal. Drop base drop pattern. I'm not familiar with drop base drop. If I look at this, I see a hybrid pattern here between a descending wedge or an inverse head and shoulders, with the shoulders being here, the head being here, and us potentially putting another shoulder for then the break of this, to go higher from there. But it's also a very descending slope. Again, order flow being the tiebreaker. Buyers are not showing us that they're very interested in these prices. They're just not. So for me, and the reason I've scratched out and I don't have the long position on anymore is I gave it plenty of opportunity to work and they're not showing up. If conditions were better, I would probably go for a scalp short again, trying to take advantage of what's not happening from this region. But given how muddy and kind of nasty the price action is, I'm reining that in. I'm saying, all right, you can't be as aggressive. You can't get away with all those things that you can get away with when volatility's higher. And that's something that's been a theme that I've been talking to you guys about for a couple of weeks now, is making those adjustments to conditions. And it's something I have to remind myself as you see me kind of doing right here, right now. I can check out gold a little here. Let's see. Depends on what contract you're on, but monthly at a lower extreme, and then you get kind of the weekly extreme fade. Yeah, absolutely. You got the intraday extreme fade to boot. Nice traversal to the highs. So it appears now, with the benefit of hindsight, that the scratch out was a great decision. Super quick little blip below that low right here. Not really anything able to sustain below there. But now they're pressing again. And actually, there was almost zero buyer response there as I look at the delta. So not a stop run, an actual real move, right? You can learn to differentiate between what feels like a stop run into an area versus the signs of a real move. You can save yourself a lot of bad trades and put yourself in position for good ones. Execution was tough, but could not have read this market better today. This low we just made is into weekly VWAP. Not really a huge level for me. I prefer the deviations away from VWAPs rather than trading at the VWAPs. But as we all know, VWAP often provides at least a short-term reaction. No, I would not. I would not recommend looking at some ETF to do. The ETF is the secondary market of the secondary market. It's not you know, the Qs, SPY, that type thing. You want to focus on the actual futures.
Hey, Merritt, good morning.
Hey, morning, Stowe. How are you, brother?
What's up, buddy? Oh, good. A little under the weather today, actually. I
Oh,
don't know
sorry to
what's up.
hear that.
I don't know what's up with me. And I'm intently trying to watch this for reversal here. I'm in kind of a bad fill at 5:30, but
Little weekly VWAP bounce here.
yeah. Yeah, weekly opens right here too at 5:20.
Okay.
Yeah, I'm not super into this fill though. Yeah, today's been frustrating. I don't know. I don't know how you've been doing. I've been kind of trying to be in my own little world to figure this thing out. I
I've
hate
seen
it.
the market well. The execution, I would assume most people would have experienced today, is tough.
Yeah.
Um, I had a bullish thesis as we were kind of holding that kind of 550 area or whatnot, and I tried a couple longs through there, and I saw that we were going to kind of run the lows and run those stops, and I flipped short, but I got kind of taken out of both of those. There wasn't good,
Yep.
clean momentum to capture.
Right.
Probably the best decision I made all day was actually around, I don't know, 10:45 or so, scratching out of all the longs. I had even added, I was really positioned for kind of a move up. And I just got to that realization, especially based on Delta and what the tape was doing, that the buyers were just not seeing that location as advantageous, and there was just not enough going on. So I bailed on the whole thing. I'm up $200 on the day for making minimum wage over here.
No, that's
But
good. I mean, dude, that's better. It's better up 200 than down 2K, you know?
yeah, absolutely.
Yeah. Yeah, this isn't bouncing fast enough for me here. The pressure seems like it's gotten to this. ES is also off a cliff too. I don't know.
It's kind of the first test of like yesterday's range. It's from the -2 of the Globex VWAP deviation. So I mean, it's a good short-term location for something of a bounce. I definitely see what you're getting after there. But you're right, it's not responding well yet.
No. The passive seller is still sitting here at 5. He came down and now he's sitting at 528.
Dude,
This,
passive behavior across the board in a very annoying way today in this
yeah.
market.
Yes.
Both ways.
much frustration.
Yeah.
Big time. All right. Now we're back. We're getting something.
Now let him cook.
Let
him cook.
What time is it? Can I get a turn? Can I buy a new period, please?
We're 2 minutes away from a new
Good Lord.
little burst of energy there. Well, man, I'm on vacation. I'm out of here.
Oh, sick. That's cool. Where are you at this time?
Sea Island,
Ooh, what's that?
Georgia.
Oh, Georgia. Okay.
Yeah.
Well, that sounds wonderful, man.
Yeah,
Enjoy,
man.
dude. I just got back, so I'm back in the office cave instead of the the beautiful hotel. So
Right.
yeah, go enjoy, brother. Hey,
right,
I'll see you next week.
We'll see you next week. I'm looking
Sick.
forward to it.
Me too, man. That's gonna be awesome.
Yeah.
All right, hit me up when you get in.
Okay. Have a
All
great
right,
day, man.
peace, buddy. Good morning, chat. Good morning. Good morning. Good morning. Nasty work. Market is pissed. All right, here's my turn. And we've got a single print too. Not good. We'll see if this baby can fill. Yep. There we go. Sorry. Position tracker was off screen. All right, let's get these singles done. All right, what's our range? 138. Okay, coming up to this. Little peek here. Get through it, you turkeys. I have this might surprise the chat. I have only taken 2 trades today. And you saw them both. One was right here, and I stopped out, and then I got back in right here at 523. I know that might seem insane, but I did not know what to do. So I did not do anything. And I just waited for the gap to fill, which is right here, 530, I think. Yeah, 528, give or take. Previous day high. It was a really good run off the open. All right, I might take this off 1 second. Sorry. Normally I am able to be much more conversational, but I'm in the heat of it right now. All right, so we are very counter trend. This is also, I mean, we're counter trend intraday. All right, I'll take that one. Yeah, so this is a tricky day for lots of reasons. All gap ups are tricky for me. because you're kind of looking for, so you come into the day bullish, right? Or, you know, you come into the day seeing that prices are clearly higher than they were yesterday when they closed. When we got into the opening drive was extremely strong upwards. We'll get to that in a second once we're done watching my position here. This is the London 30-second opening range, which was, I mean, just a moonshot immediately overnight. We retraced to it and front ran it a couple times. I was like, man, this sucks. I don't want. I almost bought this a billion times, but I couldn't bring myself to do it because we weren't down to the range, and we kept pushing lower and pushing lower. Here we are testing the previous day high again. Yeah, this just looks like, I don't know, garbage. Yeah, I'm not loving it. I appreciate that the weekly opens right here. There's still some buyers at it, which is nice, but I don't know. I mean, previous week. Okay, yeah. ES is right at its previous week value area high as well. It's just grinded down against that 418 spot. Remember, 416, 415 was kind of that inflection point that ES broke out of. So we're paying attention to that too. Yeah, I'm not going to cut this, but I assume this is going to stop me out. Yeah. It's really pressing. It's pressing. Yeah, and then we're kind of getting back into, you know, that territory we were in yesterday, which is, you know, not good. That's a big retrace, so might have to be done. Might have to be done buying this if we lose the G line. The G line is the weekly open, which is 520 also. I mean, this was nice. The first bounce was good, but that we immediately rejected these lows and came right back down to it, not great. This is a ton of selling that was rewarded. Doesn't mean we can't bounce from here, but like this feels like a knife. And it's 11:05. London's still got 30 minutes to close. It's a lot of work it can still do. Yeah, that's going to stop me out. Let's see what ES is doing. If ES gets down to that 415 spot. Nope, it's still just sitting there, huh? All right. I mean, this is a pretty big overnight range for it to run both the high and the low. ES losing it now, coming down to that 4.515. Let's see. Sorry, I am hawking this right now. This is a big time hawk sesh. All right, got down into 18. This is a good time. This is a good time to try to make sure that you're on sides. with both ES and NQ and see if they have. So this is a good way that I use this. I think Driver Trades asked me about this yesterday. I'm watching MGI on both of them just to, just kind of get a feeling for if this is just a bounceable spot in general. And, obviously we lost the G line here with this selling at 520. This bid was not able to hold this up. So nastiness, it continues to be. I guess 495. Yeah. I'll see if this decides to dig itself out of this grave or not and gets back above 520, or we're going to wait for overnight low to run and get reclaimed. What happened there at that overnight low? Yeah, nothing. That's just straight up since. And then it auctioned a bit at the G line and then left from there. Okay. All right, market. Do whatever you're going to do, I guess. Wrecking ball. Yeah, tricky read because the day is a bearish trend, is a downtrend. Not a clean one, by the way. So that's also why I didn't get involved trying to chase it short. Number one, I'm trying to skip that anyways, but we kept peeking out of the bands and all this stuff, these head fakes, that's all stops that I would have taken. Trying to stay in a short continuation. So yeah, very, very choppy short day, which is not good for me. I'm actually very proud that I didn't trade any of this. It's kind of like a miracle. If I could get Jared Tendler back on the phone and be like, hey man, check out this process win. I would do that. Do. Thank you, Robot Jim, for that stat. It's not that this isn't a healthy pullback. Because it certainly is. And I mean, it's entirely possible we're just back at this. The weekly open is a magnet level. What is it, Tuesday? Pretty sure it's Tuesday. So if it's Tuesday, our weekly stuff isn't really that usable yet. Let me bring up. I don't really like to look at the weekly stuff until. Yeah, man. I mean, we're so far extended above the monthly the trend. I mean, monthly trend is still cruising, but we're at +2. So doesn't mean it can't keep going higher, but it's just good to be, I don't know, wary of that. At least we're back down in the thing. We're back down in the monthly band, which is that yellow band. Put my position tracker over there if that's okay. All right, stuff I'm looking at. Got 145 points in the range so far. So it's not much. We still have a ways to go. We are trying to reclaim this weekly open. I'm going to wait. Anyways, I'm going to wait and talk to the chat. Hello. Good morning. Good morning, chat. Good morning. I didn't do my good mornings, so let's do them now. Good morning. How's it going? Is everybody okay? Everybody surviving this thing? I hope so. Surviving is thriving. Don't forget that. All right, we're coming up against the previous day high here at 530. The bid is around, so that's cool. I don't know for how much longer it's going to be around, but the bid is bidding at the moment. This is still, downtrend day. We're below the IBL. I'm stuck at like this slope. See what I mean with the slope? It's crazy, slopey. So we're not initiating longs in here after this first gap fill long attempt that we tried. Yeah, you see that seller just coming in and slapping this again. Quite rude. All pops sold so far. Yeah, I want to see like if we're going to get a recovery out of this, I need to see the grindy bid price action that, becomes healthy. Like these moves are cool, but they're not like productive in the same way that a grindy bid action is, because that, I mean, you can get on and that would be a context shift. These just seem like cover bids. Like quick, the faster they are, the less I'm interested in them, really. But yeah. So good morning, chat. This is not, we're sitting in a day type that is not my day. And it is currently beating us up a little bit. Let me see what ES finally got to there. All right, ES still at 1650. Yeah, I think a little lower for ES still. Might wait for that 415 spot. This is kind of where Nick and I were yesterday at the close. They were grinding this 415 to 410 node for, I don't know, the whole time we were on the stream yesterday. So I wouldn't be surprised if, I'd like to see it. At least take a stab into it. It's just floating above it right now. All right, it's 11:15. New lows. Okay. ES trying to press. Okay, there's the overnight low in NQ. Nasty. Oof. Okay. Terrible fill. This is kind of what we wanted to see, though. That 495, 500 spot. Terrible fill. I will scratch this out and get back in if I have to. Need a quick reaction, please. I talked about this yesterday on stream too. I believe I also bought this area then. This is the previous week. Two deviation up, which is, sign of strong trend continuation. Pressing into this overnight low. Come on, dude. But buyers at least appeared. ES got to that 415 spot. So we're going to take a shot. It's going to be right here. Previous day close also down here. Yeah, need to see those buyers step right now. Not fast enough. Let's go, baby. Come on. You gotta stack and push. That's the whole thing here, buds. Still so heavy on the offer. Yeah. Yeah, we should be stopped here. I don't know how we survived that. It was luck. Yeah, now they're gonna push back from 500. Not great. Oh, Lord. Not great. You know, we lose this and we're going to the other side. Be 420. Yeah, it's just. We're going to plan to get stopped here, obviously. Got 11. So it's 1120. Oh, man, that passive seller really stepping this down. Got to get through him. Drinking old style with the only folks we knew. Yikes. This Mr. 500 is mad. Not 160 points in. All right, got to push past. Are we going to push past this overnight low finally? This feels like a bit of a knife to me. See, we got to get past this guy now. That's the low to get through. See if he's still there. Watch it. See blue guy? We need to get past this red guy that was red team lost, which is never good. Nobody likes to see red team lose. Let me switch down to this. The bid keeps stepping in, but it's not a good read on the day for me. So for those reasons, all right, come back down, overnight low. Okay. Yep. Let's see. Sheesh. That was so gross. That was so gross. That was so nasty. They just pulled everything off the book. Oh man. That was horrendous. And that sucks. That sucks. That was so rude. I might have did I curse? I may have sworn. If I said a swear word there, I apologize. I'm not in charge of my own actions right now. Yeah, they're just pushing this. I don't want to be in this trade anymore. Not from here. I mean, this would be a good spot to buy. It's a terrible spot for my stop. But they're just pressing into this. It's going to keep, they're going to get the previous day close and stop me out. I'm just going to let it go. Now, this is where I want to be in, where all this buying is happening right here. This is a better spot for continuation. It was a bad spot for my stop loss. All right, we got seven minutes till the turn here. I mean, there's definitely a buyer right there at 495. That dude was there yesterday. You see what I mean, though? It just keeps getting pummeled. Grown up inside me. Ugh. Now we're stuck under it. Let me check on ES. ES back down at 410. This is that spot where that buyer was all day yesterday. But yikes. All right. Here's NQ's previous week high also here at 475. Yeah, nasty work. I just gotta wait. It sucks, but I can't buy any of this stuff. I just gotta wait. We took our shots. We got to see at least some sign of, trend reversal, context shift, anything. We definitely can't take these knives down here below the -2 Oof. Yeah, seller is so mad. Just tried to drink a closed water. That's how flummoxed I am from this day. Flummoxed. Properly flummoxed. All bids that show up just getting slammed into. All right, there's 185 on the range. That's pretty close to our ADR. I can't believe we lost previous week high. That's so sad. Brings a tear. Brings a tear to the eye. Oof. Catastrophic. Puke. Yep. Passive seller selling it the whole way down. I mean, we never got to, retest that 420 spot. I guess it could happen. I'll once I am able to look away from this, I will I'll switch to a higher time frame chart and show what I'm talking about here. All right, there's our turn. All right, London, get out of here. I assume this selling is your fault. Now, it's Jay, fair enough. All good to say here we go. This could totally reverse here at 11:30, but again, I want to see constructive context shift, you know? Like it can't just be a big pop and then we jump in, cuz this is how you eat it on a trend down day. This is literally the definition of catching a knife right here. We need to have structure on this side of the V to lean on. And right now there is none. The only thing we got was a relief bounce off a turn. And I mean, we're staring at a giant single print. So we'll just chill. If this thing's going to bounce here and give us an entire context shift, we'll be able to see it. But see, nope, it didn't. Not at all. Now there's a new low. Maybe it needed that second push. We'll see. $200-point range. That's the longest range we've had and the biggest range we've had in quite a bit. All right, second shot. I probably should scalp this short right here. If we can't make a new high here, this is turning into proper trend. We're just like just puke city. What city did I make up yesterday? I forget. What did I say? Stop loss city? Something city? Yeah, just nasty dude right here. Just waiting. He needs run. All right. All right. Now we'll watch this. We are not out of the woods, like at all. No desire to buy this. Doesn't mean it can't keep going up. I need some structure to lean on though. Like if this is just going to squeeze off, that's cool. But we're not trying to catch a squeeze. All right. So this is our next stop here, 495, because this was a big, let's see, previous day close right here. Let's see if the squeeze ends here, and I'm going to take a short if it does. We'll see. Not bad. I'm trying to watch the bid to see if it is going to pull off. Take a little breather here. There's some offer above. I still have that single print forming. We're going to reject this previous day close. Not bad. Good entry. Let's see if the seller steps back in. Come back and we're testing this high here now. Oh, almost failed me. Come on. So this is the previous week high right here at 77. I'll just take it. Fine. You gotta take those shorts quickly, you know. This could also be the healthy pullback that we're looking for if this is going to be a context shift too. So or not. Okay. Waste your time. All right. I'm messing around with the previous week high here. I mean, we can take this thing all the way to 420 if we want to. If this is going to truly trend day down. Let's see. What's ES doing? All right. ES ran its previous day low, which is good. I mean, that low yesterday was annoying. I know because I was watching it, waiting for it to get run yesterday, and it didn't do anything. Now we're holding below it. Trying to push past this. Yep. Hmm. Let's see. Still watching here. Messing with the previous week high. Yeah. I still like this spot. This is still a good entry. I'm gonna hold on to this. It's gonna be busy at the previous week high. This is like last week's all-time high. What time we got? 11:38. Seller's definitely taken off the tape. Let me see here. Let's see. ES is able to get above this previous day low. That'll be a good sign. All right, I'm going to watch ES for this. Again, here's a good example of what I'm watching on both indices. You know, ES is fighting with its previous day low right now, so that's why I don't want to get out of this short, because it still has room, plenty of room to go. This is kind of at the 5-day point of control here on ES2. Unfortunately, I can't show you all these charts at once, but yeah, I think we're in a good spot with this short. Any attempt to bid this down here is still getting smothered. Smothered, covered, and chopped. If anybody's a Waffle House fan. You guys like Waffle House? I know we like to talk about fast food that's really bad for you. That Waffle House counts. Cookout, Waffle House. Okay. Is this a rare moment where it's going to be an actual short day trend down? And we should manage this like we manage the longs? Never know. I guess my target's previous day low, 436. Yeah, 455 is that big buyer though still from. This is kind of our like liftoff point back here. So it's going to take a while to get through them if this seller wants to. Tying one's hands. We're getting it. New low. Was that a new low? Yes. Yes, it was. Okay. Oops, sorry. Here we are. Yep. It's good. It's good to be able to differentiate between a squeeze and, constructive context reversal. Let's see if we can get all the way to 420. Yikes. Couple stops. Couple stops down there. Here, I'll bring this up too. Okay. So let's look back at the. All right. So now we've made a fair bit of move. Now we're coming into this this big volume node here. So this is all of our. This is where we ramped from yesterday. This is yesterday's low. XY gave a really good DOM review of this. Also. So we're watching this node. 420 is on the exact opposite side of it. I mean, the safer way to play these nodes is not to use them as support. You want to use the other side of the node and gauge a reaction off of that. Previous week value area high might be a good spot to look. All these 4-hour highs here, you know, obviously those are all those 420 sellers that existed there for a bajillion years. So. Oh yeah, Philip, it's on the it's on XY's Twitter. Okay, getting a bounce here. Let's flip back. All right. Now again, we got to watch. Can we differentiate between a squeeze and actual context shift? Okay. So that was a good pullback. I'm just going to bail on that. So I went flat there because that did pull back quickly to 455. It's tough to see on these candles, but so squeeze up, pulled back here to 455, which was this low. It was previously respected, and then good bid response off of that. So this might be our context shift. Either way, I got to get out of shorts when I get out of them. Oh, it looks like ES got down and touched 6,400. That's funny. Good. All right, fine. Good for you, ES. Maybe is that all we were waiting for? Okay, NQ is here again at previous week high. Let's see. Seller's still here at previous week high. Right in here. We don't have, so let's look at this too. The thing that you would look for in a trend is, you know, passive seller following price down. And we don't really have that here. Like these numbers are quite small. Anything under 100, I have set to not show at all. So because these numbers are so small, I don't know. There's really been no passive seller like following this price down, and that like this is the last one kind of here. He started this whole thing, and now here's another pullback. Well, this is what we're looking for. We're looking for the pullback grinding to be a proper context shift to see if that sell is finished or not. It seems happy. It's good to be a buyer sometimes. So we'll watch this for 495 spot again. See if we can get back through it. I assume ES is back above its previous day low. Yes, it is. All right, so ES is coming up on the bottom of that 6410 node. Okay. Good to know. Okay. Previous day close. This is what we're waiting for right here. Waiting for this dude. This feels less like a squeeze. So do you can you tell the difference? This and then no higher high. Continued lower. This was also a squeeze, made a lower low. Squeeze, lower lows. I mean, some of it's hindsight, but like on the way up, this didn't pull back at all. This didn't pull back at all. This did. This is kind of a tricky one to see. Maybe I can. I'll try. This is going to make my chart refresh for a second, probably. But I'll get down to a lower time frame and I can maybe show you this pullback. Yeah, so look at this. So this is 250 vol, which is not, I mean, I don't trade with this, but you can see what I mean. Like this is a constructive pullback. We kind of need one. Whoa, okay. maybe something cool just happened, but either way, this context here in this leg, constructive pullbacks. Over here, none. This is just a straight squeeze. Zip. And same, this one kind of had one. This one tricked me a little bit, but yep. Just straight up and back down. Straight up. This one, it's got pullbacks. That's healthy. That's what you want in an actual context shift. All right, let me get rid of this. 250 fall. It's too fast. Man. Okay. Sorry, chat. Let me get back to you. I've only got 10 minutes, but let me see if I can find let me see if I can find something. Yeah, I mean, no. All this, yeah, guys, pump time. No, it was not. You can't catch a knife like that. That's how you get destroyed. You got to wait for context. I mean, now's a cool time, possibly. Coming back up to the G line. So I'd like to see this close. If I can get this single print to shut up, that would be awesome. This is buying that we have coming in, or passive selling is here and here, but now we finally reset this leg. So we can get this is now a 60-point rotation that exists. So we can use this to get long if we need to responsibly. Just trying to watch this get back to 520 or not. This little node here. And as we zoom back out, we're coming up against these lows again. This is kind of our scene of the crime for the initial sell-off, is this retest right here. So is the seller still there? Is the seller not still there? Are we just going to auction down here now for the rest of the day?
Still.
Hey, Jim, what's up, man?
Much, man. I like that trade.
Oh, not too bad. Trying not to eat it today. This is my kryptonite day, so I'm really trying to work on these days and make good decisions. All that happy stuff. Trading's
No,
hard.
I hear you.
It was cool. I got a short off though. Not bad.
Yeah.
Not bad. If this is gonna reverse too, should have plenty of time to find a good spot. Don't have to grab this this momentum move. A lot of this feels like moves like this, especially reversals like this too, trigger emotions in both directions for me. Like this creates a false sense of urgency. Like I don't know. It just makes everything heightened. And so whenever I'm feeling that feeling, I also try to pull back, relax, realize there's a lot of context left in the day still. So
Well, that's wisdom right there, folks. That's just 100%. I mean, this is, muscle memory, wisdom, experience, 10,000 hours, whatever you want to call it. That's you'll get that eventually, right?
it's a lot of pain, Jim. That's where it's coming from. These are notes from the pain cave, Jim.
Pain cave. Oh man, you're out of the pain cave now, though. You're doing good.
Yeah. Woo. Yeah. So chat, sorry if I missed any questions. I was not looking at you at all today. But we were vibing and we had some action. So I don't know. I'll be on with XY later though if anybody asked me something that I didn't answer. Sorry about that.
So speaking of that, this afternoon, who we have cooking here? We've got it's you and XYZ, right?
I think so.
Yeah.
Cool.
That's confirmed. Confirmed, baby.
Thank goodness. I'll need it. I'll need it in a little XY therapy session. I'm curious to see what he's been up to on this day. For sure.
He is a cool cat, isn't he? You just want to hang out with him.
Yes. Yeah, he's the best. There's so much to learn from him. I learned something new from him every time we trade together. So
yeah.
Wow. He's sneaky. He doesn't like people to know that he's as good as he is. You know the type.
Oh my God. Any event. All right, man. Great job. Really appreciate you for sure. Order Flow Labs in the house. Everybody hit that big thumbs up button for Stowe. Another fantastic job. And we're going to see you this afternoon. So thank you so much.
All right. Thank you, brother. See you, chat.
All right, let's do an edge report before we end the morning. Let me just take a look at this is the 30-year Treasury bonds. We had a big bid today. Nice kind of move up along this, I'm going to call it ascending triangle on a daily chart. We did get a little bit of a seller coming in right now on some news. I don't know if that was the recent news about China and the U.S. maybe calling a truce on the tariffs, whatever truce means. Tracy typed it into the chat. But in any event, nice kind of rally up here, almost a double top if you think about it over the last 6 days here, right at that 114 level. So we're kind of at a critical spot. One thing the reason I'm showing this right now is I also wanted to show, I found this edge full report. You might have saw the edge alert. And this is kind of cool. This you could track FOMC performance the day before, the day of, and the next day after FOMC. We know FOMC is tomorrow, right? And so what I did was I just looked back. I just went back 6 months, which is literally the last four meetings. And they didn't cut rates or raise rates or anything like that. Those meetings, and I wanted to see what happened to some of these markets. And I just have the 30-year Treasury bonds up, and pre-FOMC, this is 1 day before. Now, you could adjust this to 2 days before, 3 days before, 4 days before, whatever you want. But I just have 1 day before because it's today. It's 1 day before. The performance from the previous close for the bonds is up 0.42%. Let's see where we're at. All right, well, we're probably up more than that percentage today, but it helps me. It gives me another piece of information, another piece of bias information to help me create my bias for the day. So I thought that was pretty cool, and I'll show you the ES in a minute, or the NQ, whichever one you want. Daily chart though, intraday here, we got a really nice point of control established right around that 114.07. We haven't traded in that 114 handle very often lately, but we're there right now. We didn't get to that 0 DTE call resistance or that 0 DTE gamma wall. Now let's do the same exercise with the E-mini S&P. Let me just pull this guy up. And let's see what's happening here intraday. Wow, we're selling off, right? We're selling off. VWAP is in the rearview mirror ever since the initial balance, right? We have a single break on the downside. That's another stat. Let's pull up the Edgeful stats. Today, pre-FOMC, the same look back. Last 4 meetings, or 6 months here. I have 6 months settings, but that equals the last 4 months, 4 meetings. And the performance from previous sessions close till today's close is the last 4 times is averaging negative 0.93%. And then tomorrow, according to this, you would expect a positive green candle. Last 4 meetings, 1.07% on the upside, and then really kind of a nothing burger on the following day. So let's see what happened. Yep, we have this big negative candle so far. We'll see if we have continuation selling. So what does that tell me? Well, that tells me that, hey, maybe, because remember, we closed, let's see, right, regular trading hour closes right here. So we are down a little bit, not 0.93% from this mark, but we are kind of down a little bit. So what does this tell me? So I'm not sure. I don't want to be bearish, looking for places to sell at a certain point later on today, thinking that statistic may prove true again another time. So that's I thought that was interesting. Edgeful.com, it's just chock full of different measurements. You can even do this for CPI. They have the CPI measurement too. What's day before, day of, day after CPI. So it's a pretty awesome site. And remember, it's only spelled with one L, edgeful with one L.com. So suggest everybody go there when they get a chance. That is today's end of day Edge Report. I appreciate everybody being here with us again this morning. Great show, great guest. How about Jim Bianco? That dude is a machine. I love listening to Jim. He's very, very bright. And all the contributors today, and the trading was fantastic. So thank you for being here, chat. You guys are the best. Appreciate you hitting that thumbs up and that subscribe button. Greatly appreciate that one also. So we are going to be back 2:30. Me and Shai, hot commodity report 2:30, and then Stowe's coming back XYZ. These cats are going to be trading the close. Look forward to that. We will see you this afternoon.